Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right. Good morning, guys. Welcome back to another live stream. Happy Thursday to you. Hope everybody's staying safe, doing well. I saw something really interesting on Instagram this morning that I thought was interesting that I wanted to share as we started out today's show. It was this guy, and he was it was one of those, kind of feel good Instagram pages, kind of one of those cool vibey channel pages where it's more just like life lessons and stuff. Anyways, he was pointing out that for the last million plus year, however long humans have been around, we've never really lived in a society where bad news is so always pushed on us. So specifically, like when it comes to the world we live in with the internet, right? The internet constantly feeds you something bad that's happening in some other part of the world. Not to say that those things aren't, scary or we shouldn't feel empathy towards those things, but I thought it was interesting because it can be very heavy if you think about it. If you're taking in the bad news, not just of your local area, like we've done for millions of years, where you just have your local community and bad news is, bad news happens, but it's not every single day. In today's internet world, it's an interesting thought that because we have the internet, there's negative news that is thrown at you every single day. The reason I bring that up and how that relates to trading is that it can be very easy as a trader to develop a very negative view of the world because you're constantly looking at risks to the market, and there are always risks to the market. I thought it was interesting, and I wanted to share that with you guys. I thought that was both an interesting perspective to sort of recognize, hey, you're allowed to turn the news off. But also because as traders, you do have to kind of keep an eye on just what really matters. And if you've tuned into the streams over time, then you know that what we focus heavily on over here is the data, right? We don't I try to not give too much credence to the news cycle because it is constantly negative. Yesterday, we did get the, exciting, then scary, then exciting again. And, you had a big swing in both directions yesterday on the price of gold and on stocks, right? You had stocks do crazy things. You had a lot of currencies, the dollar dropped very hard and then moved higher. And what caused this, right? I hate the news, but I have no choice as a trader. Yeah, I mean, so that's the thing, right? We have this duty as traders to, especially if you're a fundamentalist, the downside is you do kind of have to keep an eye on what's happening in the world. And, whether you like the current administration, dislike the current administration, whether you like or dislike the next one, right? As traders, we have to keep tabs on how those things could impact our charts. So there is a little bit, that's kind of the work side of being a trader, is you have to learn to sort of compartmentalize those things and not let them weigh you down in your life, but also be aware of how those things could potentially create movements in markets. Anyways, yesterday we had news that, Trump was maybe going to fire Powell, and then the dollar index dropped hard, and then it jumped back up when Trump said, no, I'm not going to fire Powell. Why? Why did this cause this move? Let me ask you guys this in the audience, because this is a good practice test. Why did the dollar move so sharply lower off the rumor that Trump was considering firing Powell? Any guesses? Any guesses? Why would the dollar move lower on the removal of Jerome Powell? Well, probably because Powell is staying staunchly hawkish, citing risks to inflation and not cutting interest rates as quickly as the president would like him to do. But remember that Powell does not work for the president, he works for Congress. The Fed chairman, while put into place by the president, does not work for the president per se. However, if you're Powell, it's got to be a lot of stress on your shoulders if the most powerful person on the planet wants you gone. Specifically fired. Nothing more sinister than that. I don't know. I don't make the rules. I don't know. But the dollar index dropped hard because the idea of Powell being removed from his office and replaced by someone who is more in line with the president's desires of cutting interest rates aggressively. Cutting interest rates, we know, is very bearish for the dollar. So that was the story yesterday. But then that was taken off the table by Trump in a press conference. He said, nope, I'm not actually, it's unlikely. He said, I will never rule anything out, but I'm not looking to do that at this time. And he said numerous times he doesn't want to fire Powell. I think personally that if he were to fire Powell, it would be not a good look. You know, again, the president or the role of the chairman is supposed to be in a perfect world. And I know there's, you know, people who, you know, there's criticisms of Powell for being political too. Everybody is to some degree, they have their biases, but it is a pretty bipartisan agreement that the Fed chair role should not necessarily be, you know, an outspoken Republican or Democrat. Now, is there bias in their decision making? I'm sure there is. But in theory, the chairman is not supposed to be strongly affiliated with one side or the other. So in my opinion, removing Powell and just replacing him with someone that is super, you know, in favor of Trump, sort of is the same issue, just the other way, right? Some people say, oh, Powell is too anti-Trump, anti-administration currently. But then there's the idea that, well, if he just switches him out for somebody who's super pro-Trump, then you just have the problem on the other side. If the Fed cuts rates too much or the Fed doesn't cut rates just to spite, both of those are kind of issues. I've heard something interesting, a really interesting theory about maybe we should just let the bond market ultimately decide what interest rates do. The bond market itself trades ahead of what the Fed typically ends up doing anyways. So why don't we just let the bond market set the rates? I thought it was an interesting concept. I heard that somewhere. Anyways, let's take a look at some market movements here this morning. You've got the S&P 500 flat today, NASDAQ flat, Dow Jones flat. Russell is slightly lower, but not by much. The DAX is flat. By the way, on the Russell, I did get trailed out. I took profits yesterday on the move. The intraday volatility did kick me out of my trade, but I'm happy to take profits on this one. And and now we are locked in on that trade. That ended up being personally my best trade of the year. I entered the Russell over here. I closed out yesterday for a profit. That was a 50-day trade or so, 51 days. Ended up closing that one out, and it was my best to date of the year today. Not my best trade of all time, but my best trade of the year. My second best trade was the gold trade that many of you guys may have remembered. That was a lot of fun when that gold move happened all at once. And maybe not fun for everybody, but on the right side of the move, it was great. Gold shot higher in the April volatility, and I was able to trail stop really nicely on that one and take a profit there. So far this year has been a very, very strong trading year for me. I think the account that I'm my main kind of public account, I think, is up about 19% year to date. So to me, that's very good. If I can get 20% in a year, I'm ecstatic. So being at 19%, a little over half the way through the year, I'm far exceeding my personal goals in terms of an average performance. But look, you're going to have negative years, negative months for sure, negative weeks certainly, negative days absolutely certainly, right? Like when the sun is shining, you got to make your profit, right? That's the way trading works. Is you're not going to be making money all the time, but when you are making money, you've got to make it count. Also, just a quick side note, something I was working on late into the evening yesterday. So if you guys follow me on Twitter or X, I actually posted, or I actually have been scheduling out posts throughout the entire rest of the year, like just educational nuggets. And that's been a huge project for me to write tweets in advance for a full 6 months. But it's because it's so hard, like my day to day, to remember to like stop and like curate a piece of content and tweet it out. But anyways, that was something I worked late into the evening last night on, and I'm feeling good about that. So if you don't follow me on Twitter, it's just at TraderNickFX. If you want to find me there, would love to have you there as well. Lee says, Nick, has any trade topped your S&P 500 of 2023? Lee, that's a good question. I have to. So it's kind of hard, Lee, because I've had, like, for example, Tesla trade or Tesla position that has been running for some time, but I wouldn't call that necessarily like a trade, like in the sense that it was like a momentum with a stop loss with a, it's kind of hard, like pure P&L wise. S&P 500 definitely is the biggest P&L ever. So I think I'd have to check. That's a good question. Anyways, in just about 1 minute to go here, guys, we do have the retail sales figure coming out as well as unemployment claims. This will be really important to see. Previously, we had 227K unemployment claims come in. This week, we're expecting a 233K. Retail sales is expected to go positive. Let's hope for some strong retail sales numbers. Previously, it was negative, saw some contraction. We've got about 20 seconds to go here. Let me just switch over to our all markets view, see what the market does in reaction to this. Remember that we are looking for strong jobs numbers, would be strong for the dollar, strong for stocks, weak for gold, and vice versa. Let's see what we get with retail sales, unemployment claims here in the next minute. All right, initially a little bit of strength for the dollar. Not too much move in either direction, at least at this time. Gold is modestly softening. Okay, retail sales were strong. Retail sales came in better than expected. This is good. Core retail sales also came in better than expected. This is very good. And this is really good. Wow. Unemployment claims come in better than expected. I'm telling you, man, the U.S. economy is so impressively resilient. In the last 5 years, I have covered every single day, constantly, what's happening in markets. And I can tell you that the U.S. economy's resilience is nothing short of fantastic. It is so impressive how you threw a pandemic, an invasion in Europe, Middle East, fallout, spikes globally in inflation, and yet still the U.S. economy still finds a way to, on average, continue to beat expectations across the entire economy. It is truly remarkable how strong the U.S. economy has held up, given everything that we've thrown at it in the last few years. And now the latest one is, tariffs are going to crush the economy. The economy keeps gangbustering along anyways. It's just like, now again, I don't want to sound like, oh, it can never get beat. But like the US economy has just shown so much resilience, so much resilience. Again, people have been claiming, tariffs are going to cause price spikes for everybody and it's going to be terrible and the economy is going to crash. Retail sales just busted expectations again. Unemployment claims beat substantially again. NFP was solid. Inflation's cooling. Now, you can hear the excitement in my voice, but let me just curb my own enthusiasm for a second. It does not mean that I am it doesn't mean that I'm going to go punch the buy button and leverage up. I think that, the market has now kind of gotten excited about these things. And I typically don't like the risk to reward as much when you're sitting at all-time highs and, but again, this is where you guys know I'm long gold, but it's more of a hedge in my portfolio and not something that I have a big trade on anyways. But this data today suggests more so why gold to me, I just don't see gold having a huge move in the upwards direction. I hope I'm wrong because I'm long gold. It's a bit of a hedge in the portfolio, as I keep saying, a hedge to geopolitical, risk. And I still have quite a long position on indices. But when I look at gold and I say, okay, jobs data has been good, that is not good for gold. Right? Strong job security, growth in the retail sales beyond expectations, company earnings coming in strong. Those things are not positives for gold. If people are like, wow, the US economy is super resilient and super strong, that's not a positive thing for gold. So then why isn't gold going down, Nick? Well, because inflation's cooling and the Fed's going to cut rates. So people are like, rate cuts, good for gold. Strong economy, not so good for gold. Net result, gold is a chop fest and traders donate money to the markets who are trying to trade it. That, and if I'm calling you out, I'm not trying to put salt in your wound in any way, but this has been an environment. I know there's a lot of traders on gold who are super furious trading it right now. Because if you're somebody who's like, I trade gold on breakouts, on trends, and I look for intraday breakouts, this has been a chop fest. This has been hard, right? I mean, I bought into this gold move. Apologies. I'm not trying to call anybody out. Larry David Curb, shout out. Big Mike, I do love that show. I watch it whenever I'm on the plane. Always a go-to show on Delta. Anybody else a Delta Airlines fan? I like Delta. But I only fly first class. I'm just kidding. I am what's the one above economy? I don't know what it is. It's a main cabin. I always fly main cabin. Based in Atlanta. Yes, sir. So am I. I used to do consulting work at Delta, believe it or not, for a period of time. Anyways, stocks not moving too much off of this news either. Did we get any earnings this morning? NASDAQ earnings. Let's just see. Did we get any earnings reports this morning? Taiwan Semi. Did we get TSM this morning? Oh, we did. Hello, Taiwan Semi. I don't own this stock. I kind of wish I did. NVIDIA trading higher with it. Yep. Very nice. I do own NVIDIA. NVIDIA is my second largest position. Economy plus. It's main cabin, I think. Come on, where are my Delta people? It's not economy. Isn't it like first class? They changed it recently, actually. Delta, they changed the namings of everything in Delta. Comfort Plus. I don't do the Comfort Plus. I guess there's one below that. So it's like between Comfort Plus and economy, I think is main cabin. But man, I don't know. I'm not like a, oh, I've got to have first class kind of person. Unless well, even, yeah, no, I never do, you know. Could I afford it? I could. I'm just kind of like, you know, it's a lot of extra money for 2 inches of seat. I only fly Delta, also live here in Atlanta. Well, you know, I would, my wife is the Delta queen. She tracks all of our points and stuff, and she'll do like she'll get us like upgraded. We do get upgraded often to Comfort Plus. And if that's a flex, then I apologize. I don't know how it happens, but my wife often gets us upgraded to Comfort Plus. We're Amex users. You know, I'm thinking about this. I own stocks in a lot of the stuff that I use. I own AXP, which is American Express. And I own Delta Airlines. So, yeah. Only way to do it. Yeah. Whoops. Candace, I think we accidentally banned you. We're going to unban you. Don't worry. I don't know how that happened. I just saw your name get banned for some reason. Don't worry. We'll get you unbanned. That's bad. Oh, no, I'm so sorry. Don't worry, Candace. I just wrote it down. I'll get you unbanned. I don't know what just happened there. I like clicked off the screen and then it just said this user was banned. Spain cabin. Okay, yes. Don't worry, Candace. Like I said, we will get that resolved ASAP. I'm sorry about that. Dollar index moving higher here, up 0.5%. Yesterday, I listened to Forex James. He was talking a little bit about the dollar, and he's bullish on the dollar. And I think that it's kind of an interesting concept because with the dollar index, you've just been in this sort of oversold status for a while. Right. Even though, you know, you've had cooling inflation, I think the strong jobs data recently really lends towards some balance to the dollar. So, you know, I do think that there is sideways at the very least potential for dollar index at this time. Let me see. Look at this. Russell's going to really break my heart here. I trailed out. And now it's getting a stronger reading on the Edge Finder. Ain't that how that goes? What was I about to do? I was about to do something. Oh, yeah. I was going to look at the dollar index on the Eco heat map. Okay, so if I look at the U.S. economic heat map, the dollar index is getting a 46% read, suggesting not too hot, not too cold. We did get some mortgage application data here recently. We got jobless data or jobless claims here, which this will update here in just a second. Again, better than expected, so this will stay bullish for dollar. The producer price index did update here in the Edge Finder. You can see the producer price index yesterday came in at 2.3% year over year compared to expectations of 2.5%. That is a beat of 0.2%. Remember, lower inflation is typically considered good, not for the currency, but good for stocks, right? Good for the market. Market wants to see cooling inflation. Is that bullish for the currency? No, it's bearish, right? Softening inflation, bearish for the currency because the Fed can cut rates easier. CPI came in line with expectations, so we got a 0% neutral reading there. Retail sales this morning, when they update, will turn bullish. So we're going to still be kind of in the neutral camp. This will update shortly. It's on an hourly timer, and we'll update within the hour. Services, the hourly timer is our data systems pulling new data. So we'll update soon. Services PMIs, better than, in line with expectations, 50.8. It's pretty good. You know, I got a lot of response, by the way, I made the suggestion of potentially creating another heat map set, or sort of a way of looking at this that's not so focused on actual versus forecast, right? This is very focused. The economic heat map is very focused on actual data, like what gets reported versus what was forecasted by the analyst community in the markets, right? Forecast was 2.6, not 2.7. Thank you for that question, or thank you for pointing that out. We had a couple people point that out yesterday. Forex Factory had it at 2.6 for CPI. Several other places had it at 2.7. Our system took the aggregate. 2.7 was the expected CPI number, but it wasn't on Forex Factory. You got to remember, what is a forecast? A forecast is a sort of aggregated expectation from mostly like big banks and research institutions that try and predict this stuff, right? So their number was 2.6 somewhere. In some places, other places had 2.7, other places had 2.8, other places had 2.4, right? There's a wide range of forecasts. What we do is we take the best aggregate average, and 2.7 for inflation was what we found the most frequently. So 2.7 CPI year over year came in line with expectations. So yeah. What about oil? Bullet, let's look at oil. You know, oil might be a trade for me. I've been actually looking at oil this morning. I want to look closer at it because I started out today. I said, ooh, is today going to be an oil trade for me? So if I go take a look at oil, what do I like? What do I dislike about oil at this moment? So here's what I do like about oil. PMIs, manufacturing came in strong. Retail sales were mixed. I'm sorry, services PMIs were mixed. Retail sales were strong. When that updates in the Edge Finder, that's going to tick us another point higher. Yeah, oil's going to probably be a trade for me. Inflation's cooling. Rate cuts could be good. Unemployment rate was strong. NFP was strong. Oil is probably a trade for me, especially with this kind of big break higher. Now we're getting a nice pullback. I think this is like a 50% retracement from these swing high or swing low to swing high. Yeah, you're sitting about a 50% retracement. I like the risk to reward on oil. And I want to specify when I say that, when I say I like the risk to reward on oil, does not mean that I know oil is going to go up. It means that I think that if we go up, well, I think more specifically that taking a long here, I could be wrong. I could lose money on the trade. But I think the risk of losing money is worth the potential reward based on the criteria I just got done discussing. So oil is probably a trade for me. Stock market opens up in 45 minutes where I'll trade USO, which is the ETF. If I take this trade, I'll share it inside of our Discord VIP room. If you're not a member of our VIP group, you can get access to every signal we take currently for 45% off. If you want to get access to every trade I take, when I take it, full context, full details, analysis, breakdown, screenshots, all of it. If you're interested in signing up for those, we'll drop a link here in the chat right now to where you can speak directly to our support team about getting access to 45% off for a limited time. So here it is. Click this link if you're interested in getting access to our VIP signals. 45% off. It's the biggest discount we do all year long. We're doing a summer sale right now. And there you go. Okay. In just a second, we are going to now transition over to our next segment of the show, which is, of course, having Miko and Marco join for some good stuff. We're going to talk some technical setups, so stay tuned. We'll be right back after this. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, guys, we are back with Miko Marco. Good to see you guys, and welcome back to the stream.
What's up?
So we do this pretty much every week. We go through some technical charts together. And of course, if you guys have not been a part of a Technical Thursdays segment with Miko, Marco, and myself, then stick around. We're going to be flipping through a lot more charts a lot quicker. It's one of my favorite features of this stream segment as we go through a lot of stuff really quick. So what we typically do is we take turns going through our chart of the day, something that we are looking at most. Just quickly, just because this happened right before you guys joined, my chart of the day is definitely oil. It's probably my most convicted setup to the long side at this time. We'll see if I can get that entry once the U.S. stock market opens up. I'll be able to trade the ETF variation. Marco, what about yourself? What's your top setup today?
So for today, I would point out silver.
Okay.
So although it's pulling back in the last couple of days, we did have the breakout out of this flat range. And I do think silver could still play a nice catch-up trade to gold. So on gold, we did have this huge push up, but on silver, we're kind of lagging. I did like the initial breakout out of this flat range, and now we got another one. So hopefully this does continue to the upside, even if we don't get a risk-off environment. So even if gold does not continue up, instead gold just continues to range around, hopefully silver could continue trending up. So I'm in a buy position from the bottom of the range, and I'm just going to trail my stop loss if we do manage to continue going up. So that's my definite favorite chart. I see a lot of potential with this trade. And yeah, that's about it. Rest of the stuff is a little bit quiet. Stock market, NASDAQ, S&P 500, they seem to be slowing down a little bit. I'm waiting on the pullbacks, but we're not getting a pullback. We're not getting a huge push up. So being patient.
Very nice. Yeah, no, it's when you're in the situation of just managing a winning trade, it's kind of nice because you're like, okay, I have very little to do in terms of I don't need to be, pursuing new opportunities, new trades as aggressively. I'm sort of just sitting back and really, truly just playing the waiting game. So I've been doing that a lot myself recently. I've had that really good Russell trade, although I did get trailed out of it. So I'm sort of back on the scouting party looking for more setups again. So we'll see. I'm kind of now waiting for indices to pull back. Again, famous last words, and they'll keep ripping for 3 months based on my luck with them sometimes. So we'll see. But Miko, what about yourself? What are you watching?
So yeah, I quite like the look of pound USD. I'm interested in some downside, and we were speaking about this last week, and it does look like pound may be looking to tie in this uptrend, and I quite like the idea of some counter trend sell opportunities. I still think maybe pound USD might longer term still be heading to the upside, and like DXY might still be heading down. But after the bearish move we've seen recently, I feel like if price can take out some support here, which at the moment it is trading on and respecting, but if we can break through this, that will be the signal to me that says, okay, this bullish structure may have hit a bit of a wall, and I'm very interested in some pullbacks and more downside. So I quite like the look of pound USD and maybe some pullbacks into some areas here, but I'll see as we get more information. I quite like silver as well, but since Mark already touched on silver, I was gonna say my next best pair, which is pound USD. But yeah, I'm quite interested in some sells here. I think dollar might see some more strength over the next few days potentially, and that could present some nice shorts on pound.
Yeah, I like it. And specific, I'm glad you went to the dollar because that was going to be where I was going to ask you guys about next. Dollar's had some resurgence. And Miko, you've got the chart pulled up for pound. What are your thoughts on DXY as a whole? Is it specifically like you're really interested in the pound against multiple currencies bearish, or is it really truly you think, okay, we might actually be having a reversal here on the dollar?
Yeah, it's more so the dollar really than shorting pound, although pound's been weak as of late as well. But I think there is room to the upside for the dollar. I've been looking at this bearish channel price has been moving in. Really nice lower lows and lower highs, but as of late, we did see a break to the upside, I think, after CPI there, and another wick to the downside yesterday. But altogether, I do think there's more upside there for USD. And if this breakout really does mean business, I do think we can probably start ticking off some of these highs here as potential targets. And naturally, that could translate to pound USD seeing some downside as well. Of course, the bigger picture for the dollar is still quite bearish. The breakout of that channel, for me, doesn't necessarily mean that we're going to reverse completely. So I'm not too sure about the bigger move. The trend probably still is down. But I do think maybe for a few days or maybe for next week, we might see some strength for the dollar. So I'm quite eager to buy some opportunities favoring DXY strength.
Yeah, really interesting. And I guess same question to you, Marco. What do you think about the dollar? Is it in the process of bottoming? Is it sort of still bearish to you on a bigger picture? What are your thoughts?
Well, I personally think that we could go up a little bit more. So as I mentioned in the last stream last week, I think short term we could go up, but then overall I think we're going to continue dropping, especially if the rate cuts are really coming in 25 and possibly in 26. But it's definitely a crowded trade to the downside. Everyone is selling the dollar, so that's not the best sign, and that means we could get a short squeeze and a push to the upside. Yesterday was also a little bit of a weird event where we got kind of neutral inflation print, but still the dollar went to the upside, which was a bit of a shock. But again, I think it's all about, and I saw it in your video from yesterday, it's all about having such a crowded trade with everyone and their grandma selling the dollar. That means it's usually going to go to the upside just because most people lose money in the markets. And that's just how things work. So with that sort of selling pressure, it's bound to reverse sooner or later.
And typically those are the so I talk about a lot of times sentiment, just because you mentioned it there. Like the concept of sentiment is fascinating because if you want to talk about trades that have very, very high risk to reward, like if you are right about them, you can make substantially more than your risk. Typically, it falls in line with being somewhat contrarian to what the general consensus is. And so as we're talking about this with the dollar index, you know, a lot of institutional money has been very bearish on dollar for some time. But we've seen a little bit of a change in that here recently, which I think is interesting. Of course, institutional money is the big player at the table, which has been sort of shorting dollar for a little bit of time here. Let me just show you this really quick. This is the commitment of traders data history. We can see the yellow line is long percentage, and it's been trending lower here for a little bit. But we did see a tick up here in recent commitment of traders data reports. I'm curious to see where this goes next. If this starts to grind higher and institutions are starting to really truly put in some buys into the dollar, you're looking at a market that has been very, very cautious, very negative on the dollar for a number of reasons, right? Uncertainty about the current administration, about rate cuts coming. There's a number of reasons why traders, investors have really been bearish the dollar. If that unwinds, if that reverses, the risk to reward, if you are bullish dollar now, before that kind of change in the wind, if you were to get another move like this, as institutions pile into the dollar, you're talking about a trade where you may risk 1R and you could have multiple times that in return if you are correct. But again, the risk you're playing is, dollar has a lot of sell pressure on it here in the last few months. And So I actually lean a little bit more in the direction of where you are with it, Marco. Like I think the dollar index, from a fundamentals perspective, for those interested in it, to keep it so simple, jobs were strong, inflation's still mostly cooling off. That lends to me towards a sideways dollar. It's not jobs strong and inflation hot, which would give us a strong dollar. And it's not jobs weak and inflation weak, which would give us a very weak dollar. It's somewhere in the middle. So for me, I think the path of least resistance for the dollar is sideways. I think we probably range, and I do think that we've probably gotten a little oversold. And so I agree with the sentiment, Miko, in terms of, we've gotten this low put in, and we're now testing some key resistance. If we start to see some breakage of this sort of shelf at the 99, the triple digits mark, that 100, if we start to really break through that area, we could solidly put in a low for the dollar for perhaps that was the low of the year. So we'll see. Still going to see how things shake up with the tariff situation and all those uncertainties as well. But before we move on from dollar, Miko, you were talking about the pound dollar. Are there any other, if you were to trade the dollar against another currency, do you have any other currencies that are on the watch list dollar side?
Yeah, I mean, Euro USD for the similar reason as well. For the similar reason, the price action is quite similar as well. This one broke through a nice trend line recently. Not as aggressive or as big of a move as pound, which is why I prefer pound USD. But this one also breaking out, and I think in general, the price action, the way up here for euro has been quite tight, quite corrective. And that's one of the key things I look out for. If things are very corrective like this, it normally means that maybe the trend, not necessarily coming to an end, but it might be going through a bit of a pullback, a bit of a breather. And of course, signs of breaking through the trend line. That's a bit of a red flag for the buyers as well. So I'm quite interested in possibly shorting euro as well. But the key thing I want to see is more kind of momentum, more kind of strength to the downside, because it is overly quite corrective as well on the way down. So if I can see a bit more momentum similar to pound, then yeah, euro looks good to me for a short as well. Other USD pairs are a little bit mixed, to be honest. Dollar CAD, haven't been the biggest fan of this one. A little bit more choppy. Aussie dollar, that's starting to look bearish. I'm not really seeing an opportunity to get it, and that's been very choppy as well. So I'd say euro and pound are the cleanest to me.
All right, fair enough. Yeah, no, I think I think if I was to be bearish on a dollar cross, it would probably be pound dollar. Or maybe dollar CAD longs, possibly, but those would be my picks to litter. What about yourself, Marco? If you were to trade another dollar, I know you're trading silver, which is sort of a play against dollar in a bigger, kind of broader sense. Any currencies against the dollar specifically?
Well, right now I'm pausing a bit on that side. I think euro dollar could go down a bit more. Pound dollar, I think, could be even a bearish play if it breaks this key level of support. But possibly a good trade would be the, as you mentioned, dollar CAD, because it makes sense with the edge finder reading. So the CAD is currently very weak and the dollar is gaining strength. So on the daily chart, if we do get a breakout of, let's say, this level of resistance, we could look for opportunities to buy. So if I had to pick one, I'm currently patient, but if I had to pick one, it would probably be the dollar CAD to buy, because the Canadian dollar is so weak right now. And I think we could definitely go to the upside on this chart. We have been seeing this massive sell-off for most of 2025. I think a bit of a pause is most likely to happen on the dollar CAD. So yeah, that would be my pick. Am I trading it right now? No. Am I watching it? Yes. I have an alert set. If it breaks the high, gives me some nice, decent momentum, I'll look to get in on buy setups. But I'm mostly focusing on silver and indices. That's my main focus. I'm being a bit patient on the dollar. And as you mentioned, fundamentally, we are kind of expecting more of a range-bound environment. And it's also a bit of a uncertain environment in the future. So I have no clear direction up or down on the DXY.
Yeah, fair enough. I think one I would add to the list, just looking at Edgefinder as well, is the Australian dollar against the US dollar. I'm seeing that it's getting a bearish reading, and I'm just curious what this chart looks like, not one that we've talked about here today, actually moving down pretty sharply. Put in resistance around this 65.90 area. This one looking pretty interesting in terms of if you were to break support here, that'd be a pretty big potential kind of move lower that I think could take place on the Australian dollar. So I'll keep an eye on this one as well. The Australian dollar has been pretty weak here. Actually, in terms of currency moves that I've got on the screen, the Australian dollar seems to be the biggest mover lower today against the US dollar. I'm wondering just really quick, is that Australian dollar specific? I guess I could do AXY to take a look at the currency index. Yeah, Australian dollar here moving lower today against the group. So interesting to keep an eye on that side. So Marco, you mentioned being long silver. Gold and silver pulling back here a little bit today. Miko, do you have any thoughts on metals? I know you also were interested in silver. Are you in a trade or would you be interested in one?
Yeah, absolutely. I'm interested in some entries for silver, actually not too far away from potentially getting one. Actually, I'm looking for the retest of the high of the range. Lovely breakout last week. If price can come back and retest that around 37.28, I'm very much interested for the buy. Price action looks really good. Of course, we have been choppy for a while, but it looks like perhaps we've left that behind us, and now hopefully we can see a bit of a trend, maybe similar to what we've had with gold in recent times as well. So I really like silver. A lot of upside potential, as Marcus said, maybe a bit of a catch-up play as well, which always does interest me, and now price is not too far away from a buy. Gold I'm still pretty bullish on as well. I'm kind of just keeping tabs on gold, to be honest. I like the trend still. I think we are still super bullish on the high time frame, so naturally that does make me still want to buy the market. It's just, of course, we have been quite flat right now, which isn't necessarily such a bad thing. It might just be gold taking a bit of a breather before eventually we do see the next wave. So I can see price doing that potentially. But if I am going to get long on gold, I do want us to come a little bit lower. There's some areas of support which I quite like around 32.50, and also this low here, which is 31.50. So if price can get there, then I'll be a bit more interested. With gold, I actually quite like the opportunity, really. I might not be lucky enough to capitalize on a huge move for gold, but I think we can get some decent reactions from some of those levels, so I'm keeping an eye on that. But I think silver will be the pick for me, so going to keep a close eye on that one.
You know, what's interesting is we've talked about this chart many times over the years now, together doing these streams, is the gold to silver ratio, which actually looks really interesting on my side. If I can show you this here, you've got the gold to silver ratio trading around 88, which is a pretty substantial move lower from where we were just a few months ago. This is a monthly chart, and all this is showing, for those unfamiliar with this chart, the gold to silver ratio is a really easy way of saying how many ounces of silver does it cost me to get 1 ounce of gold. That is the way to read this chart. Very simple. And the reason it's useful is that gold and silver over time sort of oscillate back and forth between which one's the favorite metal in some way or the other. Or gold is always the favorite, but sometimes silver will challenge it a little bit in terms of its attractiveness. So what we can see here is that at times the gold to silver ratio has gone very high, saying that gold has been a significant outperformer of silver. But when this chart actually starts to move lower, what that's suggesting is relative outperformance by silver. And what I think, interestingly, if we're being technical on this chart, which is the ratio between the two, this is suggesting to me that you've kind of topped out, at least for now, on the gold to silver ratio, which could suggest that silver may actually have more room to outperform gold. Now, that outperformance could happen in a number of ways. You could have outperformance, like you just said, Miko, where maybe they both move actually lower for a little bit, but it's really gold that moves much lower than silver. That could still be a situation in which the gold to silver ratio, silver becomes more attractive relative to gold, making this chart move lower. So yeah, I think on a longer term basis, this is sort of a mean reverting chart. It goes back and forth and back and forth. And we've been at the upper limits of this historical kind of range for some time. And so I do think that there is that potential for silver, maybe in the next few years, to continue to have some relative outperformance to gold. They could both go up, but maybe this is suggesting that gold will underperform silver in the next few years. So kind of interesting. Silver really, as you guys both pointed out, moving really nicely here right now, making a strong push here on the daily chart, the weekly chart, multi-high. And just another fun fact again on silver, silver actually traded to an all-time high against many non-US dollar currencies, right? So many other currencies recently have experienced for the first time ever, or for the first time in a long time, new fresh all-time highs in their local currency. Specifically, I know off the top of my head, India, parts of Europe, and then I think maybe the British pound, but I know several currencies are seeing silver hit all-time highs, which is kind of an exciting milestone for silver to finally be kind of breaking out and doing the move that we've been looking for a long time. So kind of exciting. Silver's stealing the show here a little bit today. What about indices? Marco, what are your thoughts on indices at this time?
Mm-hmm. For me, watching the NASDAQ, so I have it on the watch list, it is kind of, I mean, it's moving up, but it's sort of this sideways up movement. You get a consolidation and then move up, consolidation, and then you could get a move up. That's problematic for me because I'm looking for pullbacks. I don't really want to buy straight on these highs, especially because I'm expecting the dollar short term to gain some value. So I would prefer to look for a support level, maybe around here, these highs or these ones. And then if we do reach these levels, I will look for buy setups. But here on the top, I think we are a bit overextended. Other than that, I have a buy trade on the DAX, which has been running for a couple of days now.
Nice.
So I did take an initial entry right here, got stopped out for a loss. And now this one is running, I think, around maybe just a little bit of profit. I'm counting on this to go up more. Fundamentally, the DAX was a pretty strong bullish reading on the Edge Finder. We were at the all-time highs, so we did break out. And we also got the pullback on the daily chart, meaning I wasn't buying the exact highs. So I think what happened here on the DAX could happen on the NASDAQ as well. So we could see a bit of a pullback on the NASDAQ because we are breaking the highs and retracing. We could very easily just drop a bit lower with some dollar strength and then continue with the overall uptrend. And I have a question for you guys. So I know tariffs is the main thing I would say as far as indices go and the US economy. And the deadline was moved from, I think, from the 9th of July to now the 1st of August. So do you guys think the deadline will be moved again, or do you think actually some tariffs will start to come into effect on the 1st of August?
It's a moving target. The numbers keep changing, the dates keep changing. To me, I've heard mixed sentiment about, like, if they move it again, is that negative for markets? Is that like, okay, they're being too soft on this whole thing and they're going to get rolled over, or are they going to stay firm? Is that going to be? It's been very confusing. I think that in terms of the general direction of trade stuff, I think the reason the market has kind of softened up its concern about it has been largely on the idea that deals still seem to be continuously being promised by all sides. Like, they're like, okay, we're going to reach something. We want to reach something.
Mm-hmm.
As long as that narrative stays true, I don't know that the dates pinpointing them down is super, super important. I just think generally, as long as there's not anger being expressed over social media between countries, I think the market can stay relaxed a little bit. Also, just a real quick follow-up on your DAX idea. I like the DAX too, because if I look at the European economic heat map, it looks really solid here. Now, again, I want to clarify too that when it comes to the EU, right, the European economic heat map, we're not necessarily saying that the European economy is just a monster beast mode economy. We're just saying that relative to expectations, we've seen some promising numbers, specifically things like GDP growth came in better than expected, and PMI numbers, which are forward-looking indicators of the economy, both came in nice on the services and manufacturing numbers. Retail sales came in slightly better than expected. Inflation in Europe is at 2%. So they're able to continue to cut interest rates, which is stimulative. So I look at this and I say, okay. Yeah, go
Oh,
ahead.
sorry, and defense spending. I think it's
Yeah.
already priced in, but if they continue to do it, it could push the markets higher.
Yeah.
Like the company. Oh, sorry, just to briefly mention this, the company, I think it's Rheinmetall. Let me just bring it up. Rheinmetall, this one. So it's a German company that produces weapons and tanks, and it had a massive explosion up. It's all because of the Russia-Ukraine war and because of defense spending. And this actually pushes the DAX even higher. So if the spending continues, I think the DAX is a nice play to go long.
Yeah. Yeah, no, I like the DAX too. It's been a top performing stock market, and I'm a momentum trader. So, when I see the DAX outperforming, I really like that. I know we've talked about that in the past, talking about taking the leader, taking the laggard. I typically do lean towards the leader, which, by the way, in the metals world, I would say is now silver. Silver kind of is the leader now. So, kind of an interesting concept, but DAX has been a really strong performer this year. And I do think it has potential to continue to hold out strong for the rest of the year. So yeah, we'll see. Mika, what are your thoughts on indices as well? Any indices, whether it be NAS, S&P, the DAX, Russell? What are your thoughts on them?
Well, I quite like US 30 because we still haven't created new all-time highs yet. So I think, again, similar to kind of the idea of silver, catching up to gold in a way, back to the all-time highs.
Sure.
I think we still got the same kind of concept here with US 30. And I quite like the buys as well. And the way I see it, there's still a lot of momentum in the market. Really big run to the upside not too long ago. I quite like how we're retracing as well. Very corrective, seeing a lot of wicks to the downside. The way I see it, if you can start to find some support here, it could be some really nice swing opportunities back into highs and maybe beyond. I'm looking at the S&P, and of course, that's kind of just slowly grinding away to the upside. NAS in a similar situation. So I think in terms of these indices, the best way to play them is maybe like lower time frame, kind of scalps almost, or day trades, kind of just trading the here and now, which is the market still bullish. We might still kind of grind higher. I do agree. I think the market is due a much bigger pullback at some stage, but again, when that pullback is going to happen, we have no idea. We could still fly for a few more weeks potentially before that does happen. So I think if you are looking to trade, especially in the low time frames, there might be some nice buys on some lower time frame pullbacks on the way up. But in terms of more of a swing trade, I think US 30 might be the one to keep an eye on because there's still value there. Not quite made the highs yet. I still expect us to do that shortly. So I quite like US 30.
Very nice. Yeah, I like the Dow setup again with NAS and S&P 500 performing really strongly. The Dow Jones sort of still a little bit behind, but if there is some rotation within the market, of course, Dow Jones typically is a little bit more value centric companies rather than not so tech heavy like the NASDAQ. If you get a rotation, if the other stocks take a turn, the Dow Jones can certainly have very strong kind of catch up periods or even outperformance periods. So we'll see how that all plays out for the rest of this year. Guys, we've run out of time here, but before we let you guys go, let me just mention to everybody who's watching this, we've got almost 500 people between Twitter and YouTube watching this stream right now. If you guys enjoyed this segment, do us a big favor here at A1 Trading. This stream is a collaborative effort. We bring on talent from all over the world to help talk markets and to keep you guys up to date and informed, and it's completely free. The best way we can continue to bring on talent like this is to show them some love for taking time out of their day to come share ideas with traders around the world. So what we're going to do here is we're going to ask that you guys take a second here to go subscribe to both Miko and Marco on their own respective YouTube channels. You can find both of them linked in the chat here. Here is Miko's YouTube channel, just Miko Audu, as you can see spelled on the screen. And then you can also search up, if it's easier, Marco's trading journey here as well. We've linked it in the live stream chat. Do us a big favor, make sure to go subscribe, find them on socials, give them a follow. And guys, thank you very much for coming on today to the stream.
Thank you.
See you. Goodbye.
See you guys. All right, guys. And up next, we're going to have Forex James in the building again, sharing some great ideas and market moves. I'm sure he's liking this dollar strength, euro dollar making a little bit of a further push lower here as we speak. We'll see if that can continue. We just got done discussing the dollar at length. It does seem like it has a little bit more upside here with some strong jobs prints and inflation that not too hot, not too cold, we'll take it. So dollar, I think, has some bounce back potential here at the very least. With that said, we're going to take a quick break here before he joins in on the stream. Remember, by the way, Edgefinder is currently 45% off. Send us a DM on our website, a1trading.com, if you want a copy of the tool. Start trading with the market data in your favor. Don't miss the chance to get our biggest discount of the entire year using the link being dropped in the chat right now. Speak directly to our support team here. We'll be right back with James just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Happy Thursday. I hope everyone's doing well. Hope you're enjoying your week so far. So yeah, as Nick said, dollar bullishness is doing very well at the moment, actually. I mean, this is the weekly chart, so it looks quite pathetic in the grand scheme of things, but, you know, it's a start. I was thinking this morning, it's very weird, isn't it, how these things play out. So as many of you, I assume, may know, is that I'm a big fan of specifically G7 to G10 currencies because they move in waves. And I don't mean Elliott waves, I mean like an elastic band. They can stretch so far and then they do pull back. Like the dollar here, this is the perfect example. And this is why I was thinking about this. Like, the dollar has a pretty significant run to the downside. It gets down to a pretty strong technical level, you know, perfect, essentially. You couldn't really have asked for a better level for the dollar to pull back to and then start retracing. I mean, this is the 10-year trend line. We came down to the 200 moving average as well. We've also got minor support here. And then it just so happens that we get a strong NFP, low unemployment, we get sticky CPI. I mean, yes, we have PPI as well, but it's just weird. It's very odd that we get down to this technical level and then the data starts turning around. Do you know what I mean? Obviously, I'm not into conspiracy theories and stuff, but it's just one of those things. Hope everyone's good. Bashi, has been a while. I hope you're good, buddy. Bashi, I saw your post on Twitter, by the way, this morning, that the trade you took. I didn't like it. That was my bad. I sort of just went on to check a notification and went off. But yeah, well done on those trades. They look solid. Othman, hello. AACA, good to see you. Okay, so something I'm considering is an Aussie US dollar short. We had Aussie news come out early this morning. For me, was it last night for US people? I'm not sure. Anyway, we had Aussie news come out. Unemployment data was okay. Actually, it was pretty good considering previous was in negatives. We came out actual 3,000 above, so that's quite strong. However, the unemployment rate has ticked down, so we do have a bearish reading there. Aussie overall is at 43, which is pretty weak. I mean, the US dollar is not necessarily any better, but I am more optimistic for the dollar. I think the only real negative for the dollar has really been PPI, and we do obviously have the debt concerns. However, I'm not going to dive deep into the dollar today. I've done that for the past 2 days. I'll give you guys a break on the dollar for now. It sounds like Nick also dived deep on the dollar earlier, so I'll give you guys a bit of a dollar break for now. Euro dollar, again, as I was saying about it's very sort of coincidental the way the markets work. Same thing here. Euro dollar becomes very overbought. We come to the top of our 200 weekly Bollinger. Pretty much, you know, we slightly broke above. Obviously, depends where you draw it, but we came up to the top of this 2009 trend line, and then again the market starts to pull back. It's just funny how the markets work. You've got to be amazed sometimes. So what we do next on euro dollar is very, very dependent on your outlook, because I know there are some people that are still very bearish on the dollar, but there are also some people that are very bullish. I'm kind of in the middle, leaning more towards bullish, but cautiously bullish. So by no means am I selling euro dollar heavily. I'm not really doing anything just yet, because although, Fed cuts for July, pretty much not, it is almost guaranteed not to happen. Obviously, you shouldn't make guarantees, but, I'd be very, very surprised. I think the markets will be very surprised if the Fed cut rates in July. But September is still definitely on the table. And what I've not checked, actually, is the probability or the CME Fed watch. Let's have a quick look and see what is expected for September. It's funny, I say I'm not going to go into the dollar, and here I am back on the dollar. Yeah, so we still got a 54.3% chance of a cut for September. However, that could change. Obviously, we do still have more data coming in between now and the September decision. So we'll pay attention and we'll see. So that's that. Euro dollar, yes, I would expect further downside if we do start seeing a pickup in a downturn in US data, and we continue to see positive euro data. I think buying the euro dollar at around 1.15 to 1.14 or high 1.14s would be quite a good idea, because this is a strong technical pullback. It's a very, very clean 50% retracement from the low to the high. However, on the other side of that, you could say even that is still technically very overbought. So again, it depends where you sit on that fence, whether you're a bull or a bear. I think you are in a position at the moment with the dollar where it's actually pretty easy for people to have either side. So like me personally, I'm bullish, but that's because I'm quite optimistic about the US. I really don't think anything's really going to happen. I think we've kind of had the worst of it and we're over it. Whereas I can understand people saying the complete opposite. I kind of, what's the right word? Relate to it, maybe. But anyway, you should get what I'm saying. So I can't pronounce your name. Sahu, last name. I apologize, but hello. Good to see you, my friend. Edward, good to see you as well. How does a cut affect the dollar? Well, Charles, we're in an interesting point at the moment because I don't think it really will. So as I just showed you, we've got pretty much, I'll just say 50-50, keep it simple. Pretty much 50-50 probability of a cut in September. However, July is priced out. So this comes down to really, do you understand what pricing in and pricing out means? I've just closed the tab. Let me just reopen this. Give me one moment. Bear with me. Okay, here we go. So essentially, a very simple way to say, is something priced in or priced out? And we're going to use the Fed watch tool for this example, but you can use anything. It's the same as an economic calendar. So you would look at the forecast. That's pretty much what's priced in. So for example, if NFP is forecasted at 150K, it comes out to 150K, you're very likely not going to see much movement. You might see a bit of spikeage, of course, but it's not going to be a massive market mover because everyone expects it. It's priced in. Same thing here with the Fed. So in this case, for the next meeting in July, which is on the 30th of July, by the way, it's a 97% probability that they're going to hold. However, if they do cut, you can see it's only expected at 2.6%. That's the chance or the probability or the expectation. So if they do cut, that would mean there's going to be a lot of repositioning. People will start repricing their ideas. They might say, okay, actually, the Fed cut way before we thought they would. Is there a problem? What does it? There'll be a position unwind, essentially, and that would then drive the dollar lower. So let's move on to the next example. So let's say this is what it happened. This is what's going to happen. The Fed isn't going to cut rates in July. September is 50-50. So what does that mean for the market? Well, that means Pretty much nothing, because it's 50-50. It could go either way. So now it's data dependent. So the more data that comes out, like NFP next month, will be the next thing that markets are paying attention to. Is it strong? Is it weak? Then we will start seeing the pricing in of the next cut, whether it be, the next decision, whether it be a cut or a hold. And that's basically how the markets work. They're always taking the next piece of data. They're essentially betting to say, okay, this is what I think it's going to be. I'll place a position, and that's what we expect. Then if that's wrong, they're like, oh God, sell the position, get out, and then maybe reallocate that capital into the right position. Or if it's right, or even better than what they thought, they might add in and continue to place that trade. So that's essentially what it is. I hope that answered your question. I kind of went off a little bit then, but yeah, hopefully I answered your question about that. So if they do cut in July, that would be a bit of a hit for the dollar. If they don't, it would be pretty much null. It wouldn't really do anything because no one expects them to anyway. You know, it's like if I told you, I'm going to bring you lunch, I'm going to get you a sandwich, and I just get you a normal sandwich you had in mind. It's like, okay, cool, that was nice, but that's not a surprise. But if I get you some massive, some really big, juicy sandwich, you're like, wow, that was amazing. You'll be excited, and that's like if the Fed decides to hike rates and like, oh, buy dollar. Do you get what I'm saying? The what's that called? Is it anecdote or whatever? Anyway, let's move on. TLDR, there's a fence and you're on it. Yeah. You know what, Sean? I should get you to write script. I'm not good at talking, really, to be honest. I quite often end up over explaining or going on a completely different topic. It happens all the time. So I do apologize for anyone that sat there like, what is this guy talking about? I'm doing my best. Okay, right. What's going on here? The explanation was good. Charles, I'm glad I answered your question. That's good to hear. Oh, the Trump thing. Yeah, this is what I was going to move on to, and I got distracted. So last night we had a huge debacle. Bloomberg, I can't remember what the headline was. It was like Trump to fire Powell or whatever it was. I was like, oh my God, what's going on? Bearing in mind, Trump can't fire Powell. It's a law. It would be a massive legal problem if he tried to fire Powell. It wouldn't just be Powell, you fired, next person in. It wouldn't be that simple. So I was sat there thinking, what is even going on here? Like this can't happen, or it could. In an alternate reality, maybe it could, but this isn't going to happen. So I was sat there watching the markets react. I saw gold going up. I sold gold, actually. It was only, I think I made about $8, bit of coffee money, but I wasn't willing to risk. And this is why I'll move on to now. So I saw the market running up and I was like, I don't agree with this move. I really don't think this is going to happen. I put it on my Instagram story, actually. I said, this is ridiculous. But the market just moved and carried on moving. Obviously, it's an H4 candle at the time. It was quite a while. And I was like, okay, I don't, even if I think this is all wrong, it doesn't matter. My opinion is completely irrelevant in the market. So if the market's going up, it's going up. I'm not going to be so stubborn or so arrogant to think I'm going to sell this and the market's just going to reverse because I think I'm right. So at the time, I was like, yeah, I think this is probably a really good selling opportunity, but I just can't really take that risk just yet. Anyway, market came down. So I could have taken the entry in hindsight, but it is what it is. What else do we have? Oh yeah, and then sorry, the update to that is it came out that Trump didn't want to fire Powell. He, from what I remember, was inquiring or something. Or asked, I can't remember exactly what it was, but it wasn't really that relevant. And then this morning, I saw on Instagram Reels, there's a video of Trump saying he doesn't know why Biden sided with Powell or something. And then the next, like the reel continued after that and then cut to, it was actually Trump. He blamed Biden for saying what he said and endorsing Powell, which was really funny. I think Trump might have some age issues going on there mentally, to be honest. But anyway, let's not get into all that. So what else do we have going on? Swiss yen. I would love to be a buyer of Swiss yen. So we do have, let's use our trusty Swiss pocket knife for the markets. pocket knife, is that the right word? Pocket tool, whatever it is. Swiss yen, bullish reading of 8, just sitting below NASDAQ. Swiss yen and NASDAQ are both really, really nice positions to get into. However, Swiss yen is a bit too high to buy, in my view, right now. The daily down here, yeah, we're currently just above our Bollinger here. So this is just a guide to tell me, okay, if price is at the 200 here, it's pretty much on average. That's, you know, I could buy, I could sell, that's cool. If it's above our 200, that's just an indication to me that this market is a little bit too extended and a pullback would be ideal. Same thing here. If we get down to the bottom, a pullback would be ideal or expected at that point. I mean, you saw that theory with euro dollar. That was a great example of using a Bollinger just to filter. It's not a signal to actually start selling or to do anything. It's just to gauge an idea of where the market might be. So with that in mind, I am looking for a pullback here on Swiss yen back into the previous all-time high, pretty much at 180, and then I would be quite happy to go long. I think the Bank of Japan, as I mentioned yesterday, is in a very tricky spot. They cannot hike rates. They also can't cut rates, so they're just stuck holding. And the Swiss National Bank seems like they're pretty much on pause as well. Bearing in mind the yen. Actually, I've caught myself out there. I'm not sure actually who has the better real rate between the Swiss and the yen at the moment. Let's figure that out together. So this is how we find out what a real rate is. I'm going to show you a little bit of something here. Some of you may know this already. It's not complex, but it is something that is quite useful to understand. So what we do is we go to our economic heat map. We want Swiss. Hold on. Where is CH? Yeah, here we go. So we go to our Swiss. We check what is our inflation. So inflation is 0.2. So let's just do it. I think I've actually mentioned this before. So if anyone's heard me talk about this twice, I apologize. But again, I think it's quite useful for people to have. So then we need to go and get their interest rate. So we take their inflation and their interest rate. Interest rates data, interest rates here. Then again, we go down to the Swiss. So their interest rate is 0.25. Oops. Hold on. So it's 0.25. Take away that. And then we do the same for Japan. So then we would do, I think Japan is still 0.5. Let me just double check again. I just want to be accurate with this before I start telling you things. Yeah, it's still 0.5. So 0.5 for Japan. Actually, let me just mark out what that's for. CHF and JPY. Inflation in Japan last time I remember was sitting around 3.8, I think. Again, let me just double check. 3.5. Okay. So then we just do the maths. It's a very simple maths problem here. So it's just 0.25 take away 0.2. So that's 0.05. And then for this, we get -3. So which one of these do you think is going to be the most valuable to hold? So imagine you're an investor. This math might actually be wrong, I'll be honest. I'm not very good at maths. But anyway, let's say you're an investor and you're looking at Swiss yen now. Which one of these looks more appealing? So you earn 0.25 on Swiss interest rates. You earn 0.5 on yen. That looks good. So we're actually getting more of a return holding yen right now on our interest rates. However, inflation is at 3.5. Then the Swiss inflation is 0.2. So actually, at the end of the day, you still get more value for holding Swiss than yen. Does that make sense? Hopefully that made sense. I'm not sure I explained that fully, but I think that was quite clear. So that's what I'm talking about when we talk about real rates. It's essentially how much of a return you're getting on the currency, regardless of the interest rate. With the interest rate also including the inflation. Sweet. So that was a very simple little lesson for you there. So that's what I was talking about. I know, again, I kind of went off there, but these things, you might learn something for 5 minutes on a stream. and you might think back in a month's time, but oh wait, actually, maybe I could use that to think a bit differently about whatever it may be. Okay, right. So let's get back onto the charts. Edge Finder here. Nasdaq, very bullish. COT score of 2, so we do have smart money buying, retail selling. I wonder why they're selling. Seasonality is very bullish, trends bullish, GDP, manufacturing's in our favor. Yeah, okay. So I would be more than happy to buy Nazi if we can come down. Very similar to Swiss yen, actually, on a price action view. Just look for previous structure, look for this pullback in. We are slightly hovering above our 200 Bollinger, which could be a little clue into some sort of pullback is on the way. And then on this retest, we start looking to take a long position. Keep it simple, as always. And that's that. Go and learn good. With that spelling, I'm not sure. Might second guess that. Dollar yen. Yeah, we can have a look at dollar yen. Nick said something very interesting about dollar yen yesterday, actually. I think is a good point. So I think, and actually I had a bet on with someone in the chat, and I can't remember who it was. But we had a bet essentially that dollar yen by the end of this year was going to return back to its all-time highs at around 160 to 161. And I said, not going to happen. He said it will happen. I don't know if he still watches the stream. I don't know what happened to him. But I'm going to stand on business, and I'm going to say that dollar yen will not go back to all-time highs. And the reason is because although the yen at the moment is very weak, the dollar, I would say, is going to start gaining value or continue to gain value. So that initially would give you the idea to start buying dollar yen. And I agree with that. I think short-term, dollar yen longs make sense. However, as soon as tariffs are done, and all it's going to take is some data out of Japan to just say, okay, we are ready to continue our path to normalization. We're ready to start hiking rates again. Then dollar yen is going to turn into an amazing short opportunity, just like Swiss yen. So if we look at this chart on a higher time frame view, actually, let's use the monthly. Let's look, how much room do we have here to continue down? If we get the Bank of Japan bringing rates back to, let's just say 2%. And we also have the Fed cutting. So obviously, at the moment, Fed's looking like they're going to cut in September, potentially. If they don't cut September, I think they will cut eventually. Dollar yen potentially could come down to 130 to 120, maybe even lower. But again, that's a very, very long-term outlook. That's something that I wouldn't worry about just yet. So in the short term, yes, dollar yen longs, I would actually be looking here to 0.5%, a 0.5% retracement using the fib. Then I'd be looking to go long. And actually, just to back up, I've got Edge Finder open twice. Hold on. There we go. So just to back that idea up, let's have a look at our interest rates projections here. This is what I want. And then let's just isolate, let's get rid of euro, pound, let's keep dollar and yen. So this is exactly what exactly what I'm talking about. So Japan and US clearly have a rate differential here, US at 4.5 and Japan at 0.5. But as we go up, we continue to see this divergence where we have the yen or the Bank of Japan hiking and the Fed cutting. Now, obviously, these are projections. This isn't exactly what's going to happen. This isn't the roadmap. It's not a case of by Q4 this year, the Bank of Japan will be at 0.8 and Fed will be at 0.4. But it gives you the idea of that. I know it's said it's not a roadmap, but gives you an idea of the direction that we could expect. So that is something to keep in mind. So if you are a dollar yen bull, just watch out for the position unwind, because this is still a very, very good positive swap trade. So you still, let me just go to the daily. So the thing is with dollar yen, obviously, the reason it was, one of the reasons it was such a hot topic for a long time is because you could just buy and do nothing. Even if you're in drawdown, you get paid because you are getting paid very, very good swaps. And again, that goes back to the interest rates we were just discussing. So as soon as that starts not really being a factor, and we're like, okay, actually, it's not really worth holding our positions. Let's unwind a bit, allocate capital other way to another asset. Let's take some profits, whatever it may be. That's where we could start seeing dollar yen continue to the downside. So there we go. I've been buying NASDAQ this whole July. Lovely. Let's have a look. So where was the start of July? Here. I've been buying pretty much since here. Yeah, that's good. Nice. Congratulations. You should be maybe in some profit. Obviously, depends where your stop is. But yeah, that's, I mean, should be a profitable trade. You should not put the traders on live. All of them are stupid. Thank you very much, Manu. I mean, you're the one watching, so if you don't agree, you can click the X. It's red. It's in the corner of your browser. That way, you don't have to listen. I'm not sure you know that. Anything can happen in the meantime? Yes, absolutely. That's why it's just a sort of an idea. Thoughts on gold? I'm pretty flat on gold. So I was saying pretty much this. I think my narrative on gold's been pretty consistent actually over the past 1 to 2 weeks. That I just don't really see any reason to be a buyer of gold. So hold on. So I mean, the only real thing is the trend in my view, because there is obviously the argument that yes, the Fed is going to cut rates at some point, but that's not the case at the moment. And as we've already mentioned, that can change. You know, all it's going to take is continued positive news. So NFP comes out strong again, CPI comes out sticky, maybe PPI comes out a bit stronger than it was this month. There is no room then to cut. So I'm not going to place a trade on gold thinking that 50-50 chance of a cut in September isn't good enough for me. I need more. So yeah, for right now, gold can continue trudge into the upside if it's going to do that. Just sort of this horrible price action it's in, while it stays higher time frame range bound. Fine, I'm not gonna be upset if I miss something like that. But yeah, there's just not really any catalyst. And again, I mentioned this yesterday, so I apologize if I am just a broken record. But if you think about gold, it's had multiple catalysts over the past years. We had COVID, we had Russia, Ukraine, Middle East, election concerns, Fed cuts. There's numerous things. Whereas now, that's all priced in or non-existent. So like the election concerns obviously is done. That's no longer a factor. Russia, Ukraine is flat. Middle East, flat. Fed cuts are on hold at the moment. The only thing I guess is economic uncertainty. You could make that argument again, as I was saying earlier, there is an argument for dollar bearishness, which could then justify obviously gold longs. But from my view, as just a humble retail trader, I'm just not really a fan of gold buys right now. Like and subscribe before you leave. Yes, I would agree with that. Drop a like, even though he thinks we're stupid, he could drop a like. That's courteous. Check Dow. You know what? Actually, my friend, Sean, I missed it. Look, you can see I marked up the NY high before I came on stream, and then obviously I was on stream and forgot. Sad. Let me mark this up for future reference for when I get off stream. There we go. Sweet. So, no, I've not. Have I marked up the wrong candle? Whatever, anyway. So Dow, I was looking at Dow on a lower time frame today on the 15, and I was like, you know what? That looks like a really good long position. I didn't take it. Wait, hold on. No, sorry, not Dow. I was talking about NASDAQ. Ignore that, sorry. All right, let's get back on track. I think, to be honest, longs are the best opportunity here with the Dow. I think it was it Miko or Marco? One of the two. One of the two said that he likes Dow because it's the one that's not broken the all-time highs yet. And I think that's a really good point, actually. I think that we could see the Dow continue higher, follow trend, and break those all-time highs. So I would also say this is probably the cleanest of the US indice markets. Where's the brush? Here we go. So typical trend following, where we just expect price to bounce off 200s and continue higher. We've had that. This has been very, very clean. So to be honest, I'd be looking for some sort of pullback or the break and retest of the all-time highs, and then I'd be looking to go long on that break and retest, or sorry, on the retest. So yeah, very simple. I wouldn't look to sell. I know the rumor is we've got that 10% pullback coming. I would agree. I think that definitely could happen. But again, you know, as Miko or Moko, I can't remember who it was, so I'll mention them both. Someone said it could be in weeks, or you know, it could be tomorrow. You know, no one knows. If you sit there on these markets and say, oh, you know, we could pull back here, we could pull back here, we could pull back here, it's a little bit overbought, you are going to lose. It's much more profitable to be optimistic than a pessimist. And a friend of mine, Capital Hungry, says that often. You know, it pays much better to be an optimist than a pessimist. And that's true. You know, if you look at the S&P, look at NASDAQ, look at Dow, even the dollar, you know, if you were optimistic on the US in general, you were paid very well on the dollar over the past decade. Obviously, you know, the gold is obviously a counter argument to that, but anyway, hopefully you get the idea. Gold best buy sitting on 3,300. What do you mean my time, Sean? Oh wait, no, hold on. Wait, hold on, let me see. So, oh wait, that's 2, so it's this candle actually. Yeah, you're right, my bad. It's that one. There we go. So gold buys at 3,300. Let's see. 33. Yeah, so we're just coming into 3,300, aren't we? Pretty much. Yeah, I mean, I guess it does make sense if you were more of a technical trader rather than a fundamental trader. 3,300. Yeah, I get it. It's quite a nice psychological level. It's been respected previously as well. But the problem for me with that is that would require gold to sort of just stay sideways. I mean, obviously you could get that break to the upside, but that would then break this trend line. So you'd then be creating a lower low. So yeah, I don't know. I feel like at this point I'm just trying to dissect gold, trying to find something rather than it just being a clear trade. Like, so yeah, tricky. Okay, let me just check the schedule for today. I assume I'm on for an hour and not half an hour. If it's half an hour, I think I've really run over. Yeah, okay, so I'm on an hour, then it's Chris Pulver. Sweet. Similar as, or same as always. That's fine. Okay, let me just take a quick drink. I'll be back with you in a sec. I got this cup at a baseball game in Miami. I've never seen one before. It's like a aluminium cup, or aluminum for the US people. I had to bring it home. I thought it was really cool, because at like football games and sports games in the UK, you just get this horrible plastic flimsy cup, but that one is reusable. Save the environment. Anyway, right, so let's just double check. EuroCAD. The thing is with a lot of the Euro pairs, like EuroCAD and Euro, was it Euro Aussie? I think one of the two. I think I was quite bullish on it. Not from like a deep dive economic view. I just kind of liked the idea, but I didn't get around to doing the full process. However, something we need to keep in mind, and again, I did mention this, was it Monday, Tuesday, one of the 2 days, that the dollar and the euro are pretty much inversed. So if we look at the high on the dollar, or the most recent high, which was, in this case, let's say 6th of January, and we look at the 6th of January on the euro index, which is here. So the dollar's at its high, the euro's at its low. Then we do the same thing here. So the dollar is just just what looks like it's bottomed. The euro just looks like it's topped. So the thing is, the reason that happens is because the next asset from the dollar is the euro. That's where investors go. in terms of currencies, that's like the euro is the next hot thing, you know. It's like when the dollar's not cool anymore, you want to get rid of your dollars, let's go and get some euros. Euros are pretty cool. And obviously then vice versa, the dollar becomes the next hot thing, then the euro is the next loser. That's just the market, that's just the dynamic between the euro and the dollar, essentially. Obviously I'm simplifying it, but that's the way you can think of it, really, as a general rule anyway. So as we see the dollar start to pick up, we see a lot of these euro assets starting to struggle. Euro CAD struggling, Euro Swiss struggling actually, but not anywhere near as much. I mean, euro dollar obviously is struggling. So yeah, the dollar resurgence is something that's just keeping me away a little bit here from these dollar pairs. What's my trading capital? I'll tell you in a second. I see Nick's put a message in. Hold on. My old roommate still brings every cup from board games. Yeah. No, it's cool. I mean, it keeps my water cold. Put an ice cube in there for the next 1 to 2 hours. I've got nice, fresh, cold water. So trading capital, I'll be completely honest with you, very low 6 figures. And when I say very low, I mean like very low. So the way my trading is structured, I have at the minute no trading account. I am 100% sat in cash. Well, sorry, no, that's a lie. I'm like 90% sat in cash. And this is because I am moving to a new country. Let's just draw a palm tree here. There you go. So obviously that's capital intensive. So I just want to make sure all my money is liquid. So if anything happens, I am able to be okay. Then the other section of this is sat in an investor trading account with Blueberry. And this is so I can fulfill my contractual, I don't know why I'm drawing, but this is so I can fulfill my contractual agreements to clients. So that's it. I've got one very, very, very small trading account, but generally speaking, you know, if you asked me without the move and without the cash, it'd be very, very low 6 figures. So there you go. That's your answer. Maybe one day I'll be a bit more public about my actual capital, but for now, you know, that's like me asking you what you earn at your job. I don't know. I just think it's a bit personal, but you know, it is what it is. Drawing again. You know what? I saw a YouTuber that does that. He sits on paint and just draws everything he talks about. I thought it was quite captivating. You know, maybe that's the new method to keep retention, is just to draw everything you say as pictures. It's for the new gens, the people that have dopamine fried brains, so they can keep up. Anyway, let's move forwards. Pound New Zealand. This is what I mean. I get distracted so much. Pound New Zealand is, or was, let me just double check it still is. Yes, very bearish, and it's come into entry. So you know what that means, ladies and gentlemen. This will be a nice short position. If we can close bearish here, we've got 3 hours for this H4 candle to close, and that will then be my option to get in. Take profit probably just at the sort of lows around here. Yeah, this is fine. So nothing too crazy, because if we look, generally speaking, it's a bit of a risky trade, technically. So I'm selling into what previously was a massive uptrend. This was strong. This was a big, big move. Or very, yeah, whatever. You get what I'm saying. Big move, big, strong uptrend. Then we're stuck in consolidation. So either way, I'm not really at the optimal point of this market, because we're not in a downtrend, is what I'm trying to say. So range trading can be fine until we get to maybe around here, the recent lows. Then there's nothing stopping this market just continuing to do this, which, you know, is okay. That's fine, but it's just not ideal. But then again, we need to account for this. So all it's going to take really is something to happen, some sort of catalyst to bring the bulls back, and there we go. We're continuing higher. But you know, I'm thinking worst case scenario there. As I already showed you, the pound New Zealand is the most bearish asset on the Edge Finder, so I think we are pretty much good to go there. Keep Subway Surfers on the slider window. You know what's funny? I did that for one of my streams. I put it there for a little bit. But I got distracted and I ended up just watching Subway Surfers. So it was a bit of a what do you call it? A catch-22 thing. What do you think of dollar CAD? Dollar CAD, I think could. Let me just double check. I think off the top of my head, it should be doing quite well. However, the downside, I say this all the time and I never do it. It's like I need to research oil. I just never get to it because oil is just not something I really care about. I'll be completely honest with you. Last thing I heard was OPEC was increasing production, which on face value, that's bearish for oil. So dollar CAD should be benefiting well, which it seems to be doing. Obviously, then we layer that on top with the strong dollar. Let me just also have a look. Let me check what the Bank of Canada's stance is right now. Bank of Canada holds rates steady at 2.75 amid stubborn core inflation, above target and resilient labour markets. July 30th decision and Q2 GDP are key for next steps. Their stance is hawkish to neutral. Okay, so I would be cautiously bullish on dollar CAD. So I would be looking for, again, just assuming you want a short-term, so intraday short-term swing trade. I'd be looking for a moving average cross just to indicate that there's a trend change, nothing overly important, or not using them as a signal to say. Wait for some sort of pullback, look to get long, and then just run something maybe up to recent highs, something like this, like that there. And then if you're still confident in the idea, you would watch the labor market data and you would watch inflation and you would watch the Fed and the Bank of Canada's rate decisions on the 30th. You could be in for an absolute rocket ride on the 30th of July, potentially. If the Fed decided to cut and the Bank of Canada did something unexpected, then this market could be crazy. But anyway, yeah, my short-term view, just to actually summarize, is bullish, but I think we could go much higher. But again, we've got some things to stand in the way. We do have a lot of room actually to the upside that we could see get corrected. James' attention span is the same as the kids I'm currently babysitting. They're 4 and 5. It's not. I think I might have ADHD, but I don't know. I don't know. Maybe not. Who cares? I like the way I am because I can quite easily get very focused on one thing. But as soon as that focus breaks, I'm done. It's like I could quite happily sit and write a 1,000-page thesis on the dollar. But then if someone tells me, it's like, oh, James, can you do this? Or we need a call. It's like, okay, cool. But then I won't touch that thesis again for the next 6 months. You know what I mean? It's hard to explain. But I don't know. I'm not diagnosed with anything. So as far as me and you are aware, everything's cool. Cool, bro. Palm tree. Palm Island, Dubai. No, not Dubai. No, it's not for me. I'm just going to go and live in a what do you call it? A hammock in a tree in Indonesia. I'm going to go and drink some coconut water. I'm going to I don't know what is there to do over there. Just do something. go and relax for a couple of years, and then when I run out of money, I don't know. Might go and work at Walgreens or Walmart or something. Who knows? So I mean, I don't know how we got onto this topic. I'm the same. I think maybe it's ADHD. I don't know. I don't really care. I'm not. I think that I don't know. I don't know if I should say it. I'm just trying to think of how to word this very carefully so I don't seem insensitive or red pill. I mean this with the greatest respect, but I think there's a lot of problems these days that are just getting diagnosed with things. It's like things that are normal. It's okay to just be different. It doesn't mean there's something like wrong or you're diagnosed with something. It just means you're a bit different. I think that goes on a bit too much, which is why I won't go to the doctors. I don't need to. I'm completely fine the way I am. it's it you know, it's a bit of a superpower. I'll be completely honest. You know, it's I think, yeah, hyper focus. It cannot be wrong. You're bad at jokes. I'm sorry. I try my best to entertain and to educate. Sometimes they land, sometimes they don't. Hiking and chilling near the beach. Yeah, I mean, yeah, I did a bit of that in Miami, and I got really bad sunburn. It was really bad. Um, that was a big mistake. I didn't put sunscreen on, and then had to run to Walgreens and get some aloe vera. Absolute nightmare. Anyway, we should probably get back to why you're all here, which is FX and trading and stonks. Although I don't trade stonks, so we can stick to FX. So you're from Indonesia. There's plenty to do. Trust me. Well, I might send you a message. I've got no friends over there. I don't have any friends here either. So maybe we could, I need some friends over there so we can I can get introduced to activities and locations. Anyway, pound Swiss could be an option. The UK data has been very, very poor. And speaking of UK data, actually, I'm in. Did I already speak about this? I can't remember if it was yesterday or today. My euro pound seems to be pulling back, which is good, because this has been not difficult actually. It's been very, very smooth, but it's just been long. You know, when was the first short? My first position here was over a month ago, and I'm still here, which is, you know, a bit boring. But the good thing is I get paid swaps, so I can just chill. You know, I've got my mental stop here. Worst case, I'll lose 1.5%. It's cool. However, so far, as I said, with the dollar starting to appreciate, naturally we start seeing pressure on the euro. So it's working out quite nicely. New Zealand yen. This trade's very, very, I mean, it was very, very smooth until we got the news yesterday about Trump and Powell. The market's really freaked out. We saw a rush to safe havens. Obviously, yen started to appreciate. New Zealand dollar was sold off. New Zealand dollar's risk asset, blah, blah, blah. Now we're starting to see a little bit of buyers starting to pick up again. But yeah, that was is what it is. Bashy CHF. I've got no idea what Bashy CHF is. Do you mean pound? I think you mean pound Swiss. I think I've heard that name before. 15-minute breakout above VWAP, breaking out midnight range. Yeah. Wow. Look at that New York Open. Really nice. See, the idea behind this strategy is we draw up. We draw up the second 15 minutes. So we have the market open, then the 15-minute candle here. So the high and low, we wait for a break and close. So this wouldn't have worked because we didn't close below the range. This one, however, would. So this would have been a buy candle. And this is following Tom Hugart's strategy. Very, very good. You know what? Actually, I'm turning into one of those guys. I've started drawing up some pictures of candlesticks. So I'm going to do that and memorize all these cool things about candles. So that's something I've never really looked into candles too much. You know, a engulfing candle, bullish and bearish and doji, and that's pretty much all I've got. You know, that's as far as my vocabulary goes in the chart world. But yeah, there's all sorts of stuff going on. Crayons, yeah. I just have to make sure I don't eat those crayons. Swiss yen, yes. Let's have a look at Swiss yen. Where has it gone? Here. Yeah, sure. And that's not in the plan. Although I've heard people do actually do that. Apparently, that's a recreational activity for some people. Sorry, I just had to read a message. So Swiss yen, I think being a buyer in this market makes a lot of sense. I think it's a great trade, to be honest. The trend has been unrelenting for bears. It's been an absolute dream for the bulls. It's just been straight up. It's been absolutely no problem. We do have the edge finder giving us a bullish score of 8. So, you know, if you want to be a buyer, I think you're on the right side. Oops, wait, hold on. So there you go. You're on the right side, but just don't be too late or too early. And by that, I mean, right now you're a bit too late because we've already had such a massive run. We are technically very, very overbought now. And what I mean by too early is you don't want to just retrace to here and then buy, and then it actually comes down to previous highs, or it comes down even lower. Now, obviously, this information applies to every trade in every market, but hopefully you understand what my point is there. You're in the Euro pound trade too with 0.01 lots. Nice. I'm not actually far behind you. I think I have my top position on Euro pound was 0.08. So this one's 0.08 and the others is 0.05. The 0.08 was just a complete misclick. I'll be honest, I didn't actually realize it was set 0.08. But either way, it's actually worked out quite well because it's offset my average position size. So I can actually close a little bit earlier if I want to. There you go. Thank you. No problem whatsoever. That's what I'm here for. I'm here to attempt to make you smile. If that fails, at least maybe you'll learn something. Sweet. So Nasdaq's continuing higher, which is good, but it's also a bit frustrating because I really want to get into a long position, but I've just got no opportunity here whatsoever. EuroCAD. It fits. Let me just see again the edge finder. Where is it? So it does have a score of 7, which is good. You know, that I would like to buy, but my spidey instinct is going off here that it's not a great idea. And I can't really tell you why. I think it is really just the fact that the dollar is starting to appreciate, pressure on the euro. Price action here just isn't that convincing. We tried to go higher. Obviously, this was Trump and Powell. Didn't manage to maintain any high prices. Now pushing down again. It's just, yeah, it's just not. It's not giving me those eyes, you know. You know when a girl gives you those eyes and it's like, yeah, okay, now it's time to go in for a kiss. I'm not getting that from this market. I'm more just getting a, you know, like a, so start on the sidelines here. If I get those winky eyes, maybe I'll go in later. Pound New Zealand, again, as I said, I think this would be a great short, actually. If we can just close bearish on this candle, that's going to be the opportunity. Dollar yen, too high to buy right now. I would like to be a short-term buyer, would require a 50% pullback, or at least pull back to the 200 moving average. Either way, I'd like to buy, but right now I can't. Euro Swiss, I would attempt this one if we can come back to the 200 moving average. That would indicate quite a healthy pullback, pretty much the same as what we saw in this situation here. Take a short here and then just sit through we'd have to just sit through this chaos. It's a horrible market day-to-day price action-wise, but there is potential there. Chicks? What do you mean chicks, Luca? I don't have a farm for birds, unless you're talking about girls, in which case I get none. I've got a happily long-term relationship. Pound dollar. So as I was saying earlier in the stream, I would have loved to have been a seller, but it was just a little bit too risky for me to sell it right there. So I'm sat now waiting for maybe a retest of this level, maybe a pull back up into the 200, whatever, you know, whatever I'm given, that's cool. Then a break and retest. We could enter on this retest if we don't get a pullback. That's also an option. But yeah, I think pound dollar is also a great shorting opportunity. We do have a bearish reading. It's only -5, so it's definitely not overwhelming, but I would be happy to take that chance. Ducks. Yeah. Euro dollar. As I mentioned yesterday, there was quite a lot of bank orders sat at 1.16. A few of them got liquidated, and by liquidated I mean stopped out. Refinitiv is a good example. They counter traded my idea and got stopped out. So I have a guy that's sending them an email with a free membership to all the traders. So maybe they could, get on the right side. But either way, I'm not really very hopeful. If you are a bull, I think 1.145, 1.15 could be your opportunity. Beyond that, I don't know. I think if we break lower than 1.14, worst case, we're at risk of going down to parity, to be completely honest. But we'll see. That's a long-term outlook. Parity is, a bit of a danger zone. Aussie US dollar, I'd quite like to be a seller here. A similar thing with euro dollar, really. We've had, obviously, dollar weakness. This market was just a lot of upside. So if we could start seeing some sellers step in and we can see a new trend get established. So if we can see, something like this, lower highs, lower lows getting printed, we can see the moving averages indicate the trend change. That would be beautiful. I think we're still a little bit ahead here that we could get quite a nice selling point. So that's definitely on the watch list. GPUSD going to form left shoulder, bro. Right now it's consolidated short-term buy. I don't take trades based on technicals. I take trades based on fundamentals. Technicals are just a way in. But if that's what you see and that's what works for you, then more power to you. But for me, that doesn't do anything for me in terms of my decision making. I don't mean any disrespect by this, but just from my point of view, with a lot of technical patterns, like wedges or heads and shoulders, if you collect enough data, I think you would find out that 50%, maybe 51% of the time it does work, 50% it doesn't. So the real edge really comes into the risk reward. So if you take every single one over the past 10 years and it's 50-50, the edge comes in to you taking 2x more than you lose out of each position. So that's why I'm not really overly concerned about technical patterns and things like that. What's the best free resource to keep up with the currency news? Okay. I'm going to be a little bit biased and a little bit not biased. So, Sean, I'm going to get into that. It's a good point, but I will get into that in a second. So what you could do, you know what? The A1 Telegram channel is actually pretty cool. I like their channel. They do good updates on markets, good reasoning, good theory. Good fundamentals behind it. My Discord is also free. I do daily analysis. So I'll show you today's, for example. And again, this isn't sales. I'm telling you, this is free. You can get in my Discord. Hold on, let me find it. So there's stuff like this. So it's just a case of what's the market mood today? Is there any upcoming news? What's the edge finder saying for today? Any bank trades that are open, currency strength, very, very basic stuff. Then if you want more like, I don't know, what else would you want? Data, you could use something like, let me have a quick look and see what I've got on bookmarks here. Trading economics is amazing, actually. So, for example, if you were looking at, let's say, euro dollar. So let's go to markets. We'll go to currencies, euro dollar. You can see here, they have an automatic thing here. What is the situation with the market? What's the context behind the market right now? And that's good. And you can see, you could go and look at the GDP for each currency and that type of thing. That's another way. But Twitter is also a great resource. Obviously, if you follow the right pages, so you could use something like Bloomberg or Reuters, Live News Squawk. Discord is a good point, actually. I actually don't have the link. That's my bad. Anyway, whatever. It is what it is. I think don't worry about my Discord. Go to the A1 Trading Telegram. That's good. And go to X and follow Reuters, Bloomberg. Who else? There's loads of pages. Zero Hedge. There's all sorts of people out there you can follow. Bashi, no. Well, when I say free, I mean the analysis is free. So you can get all of our daily analysis for free. Obviously, the signals, the education, the chat, everything like that is obviously for members only. But I'm trying not to be. I'm trying not to really promote it anymore. I'm trying to sort of keep it as its own thing. Anyway. Okay, right. Let me just get back on track. I've just realized my time is pretty much up. So we've got Chris Pulver coming on in, I assume, a minute, maybe 2, 3, 4, 5 minutes or so. So if there's any final, very quick questions, let me know. If not, I'll find something to talk about. I'm sure I can do it. Let's just see. So the next trajectory for the dollar, or the next expectation I've got, is very, very imminent, really. So we're coming up to the most recent high here on the weekly. We either fail to break and we see sellers stepping back in, or we break above and start creating new higher lows. And the real big teller will be this high here. If we can break above the high, which is at 101, so if we can break this high and start creating higher lows, I think we're pretty much set then for the dollar to start coming into this range. So between 104, 108, I would say is sort of from there. But yeah, the data for the dollar is pretty good, I would say. I mean, it's not, it's by no means amazing, but it is good enough for the dollar to not sell off down to, 90, 85, 80. At the moment, again, anything could happen. Especially with Trump's behavior, we could see anything go on. This US 30 candle was crazy. This would have been a really, really nice long opportunity. Anyway, let's not reminisce on what the past has done. Aussie, New Zealand, and Bitcoin. Guys, you're asking questions at the right time because Chris Pulver is here to take over the show, so he might be able to get some things that you want. Guys, I appreciate everyone watching and listening. You've been great as always. Enjoy the rest of your days. I will see you all tomorrow, and don't get margin called.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Good afternoon? No, maybe for some of you. Good morning. It is Thursday. We had some news this morning. Nothing too crazy. Core retail sales came in better than expected. Unemployment claims came in lower than expected. Markets are off to a bit of a boost to kick off the day. Nothing too crazy. Had about 30 minutes of upside. Yesterday was a little wild and crazy. Trump kind of tested the waters by saying, "Hey, I'm going to fire Powell," and the market reacted very poorly. And then he said, "Wait, I deny that. I didn't say that. Nobody ever said that." Anyway, noisy day. The market was down about 0.74% in about a half hour, and the VIX spiked up about 15%, and then it reversed course and ended up finishing higher for the day. So, interestingly enough, we did a pretty spot-on move around a 1.07 right there before the market topped out. And I still think it's the same thing I talked about, like literally a video last week, video this week, which is watch the level at 63 for resistance, watch the level at 62 for support. And right now we're just kind of surviving in between. So that is the plan. So today, what do we have? Well, price is up for the first 20, 30 minutes and stalling here. Are we going to go up to retest the weekly highs, which was Tuesday's CPI news high? Or are we going to fade and get out of this? I've got a dead zone here where I can make money. If price is above this, I make money. Prices below this, I make money. Inside of it, end of day, I got a little dead zone. It's only 20 points wide, so I'm hoping that price doesn't stick in that dead zone today. But I'll find out. So that's one of the trades. I didn't get enough premium to sell where I wanted to. I'd like to sell it higher than 6,300, but the premiums were so crappy that I didn't take the trade. So I'm looking to see, like, do we get up to 6,300 today? Is that going to be, retest of the highs for the week? Or do we take out today's 20, 30 point move and give it all back? We'll find out. I think there's some sticky levels around 6260, 6250. But if we start to fill up some runs down to these directional levels, that would be kind of nice. So we'll give it a chance. All right, let's do some top down here. Currency strength, it was the dollar and pound on top this morning. So dollar's making a run, has been since about 8 p.m. last night. Dollar showing some strength. Aussie since around 9 p.m. last night. This all Eastern time. Aussie weakest of the day. Everything else, you've got dollar, pound on top. You have Aussie on the bottom and everything else in the middle. So, still fairly contained, but 60 on the upside, 60 on the downside. Big move on the Aussie dollar to the downside, right? Aussie dollar showing signs of a pullback. I mean, this seems like so manipulated, honestly. Like I can't tell you the last time I've seen a currency just move like so perfectly choppy, perfectly trendy in a channel. I don't know. It's kind of weird. It just seems like there's a lot of like a lot of hesitancy in the currency market. There's obviously like melt up in the stock market. It's being carried mostly by top 10, top 15, top 20 stocks. The S&P 100 doing really well this year. The S&P like top 25 doing pretty well this year. Market breadth is narrowed quite a bit. Like we're considerably concentrated once again, but it's not enough to derail. And the price action is suggesting like we're not really breaking down yet. This poke at 62 was a rumor and denied, and the market is just I just think it's complete misdirection. So this is what happens. This is the difference between trading and investing. Investing, this is even on your radar. Trading, you see this stuff trading every single day. You trade 0 DTEs. You're like, holy crap, that's a big move. That is a big move. When the market drops 0.7% in 30 minutes, that's a big move, right? That's a 0.86% drop. This market moved 53 points in about 20, 30 minutes. That's a lot for intraday volatility, which is why the VIX spiked up 15% yesterday and then faded. Here's a move on the VIX yesterday. So VIX expiration was Wednesday morning, and then we had that rumor that Trump would want to or wants to fire Powell. Market hated it, and then he denied it, and the market came right back. So VIX came back with it. Okay, so we'll see what ends up happening for the day. If I can get out of this yellow box in this little dead zone, that's good. If we break the lows, I'd like to see it below 62.60 and lower. I think we have a pretty good floor here, like intermediate support around 62.40. So that wouldn't be a bad spot for me to see some price settle today, 62.40 area, or obviously get up and try to retest the high at 62 or 6,300. So if we just stay here for the day, that's not going to be my favorite. I'd like to see price go a little bit more directional on a Thursday, trying to get somewhere for the day, good or bad, because I just needed to get out of that dead zone. Okay. All right, let's go. Tail of the tape, we're SPX positive slightly, Q slightly positive, Dow slightly positive, Russell reasonably positive, pretty good actually on the Russell. So still choppy, hasn't really rolled over yet. I've got a lot of August 1st expirations on some of my covered calls now. This week, some trades and some winners. Did a lot of rolls this week. Took a naked put on NVIDIA. That's my highlighted trade of the week. It was a 350 credit that I closed down for 23 cents. I also did some rolls. I have a collar trade that I rolled out for $1.45, which adds to my bottom line. I've got naked puts on American Airlines that'll be for full profit for 100% gain. TLT, I did some rolls, and Tesla, I did some rolls. Lyft, I think I need to actually. I've got a cover call that expires on Friday. I'm going to go ahead and probably roll that down. Or did I do that on Lyft already? I think I may have, or I just looked at the prices. Let me check. Lyft. Okay, so these $18 calls I'm going to end up rolling down. Maybe like a 15 or 16 covered call and try to grab like 40 or 50 cents, only out for another like couple of weeks. So trade at 1482. Yeah, I don't know. A couple weeks out, maybe as long as I get like maybe close to 50 cents on the covered call. That's not bad. Tesla did some rolls. MicroStrategy did some rolls. SPY did some rolls. Johnson & Johnson took, I'm actually looking at taking some profit here. Johnson & Johnson's up to 163, 164. I've got bull put spreads that are up about 70% of max profit. I pulled in 528. And I mean, I'm up 360. I'm gonna let this go a little bit longer. I think we're good. Naked put. This was up over 500 bucks. 72% of max credit. So I'll let these go a little bit longer. Healthcare space seems pretty healthy right now. I'd like to see Johnson & Johnson get this lift off to maybe bring up the healthcare sector a bit higher. I'd like to see if something like, Pfizer can benefit from that. Eli Lilly had a big day this week. Like, healthcare sector in general. Eli Lilly are big names. Pfizer, Johnson & Johnson, AbbVie, some of those plays. What else? Pfizer is 24.63. Ethereum's been ripping to the upside pretty nicely. I've got some trades running on ETHA. So Ethereum is, I mean, this is quite the run. This has been outperforming Bitcoin pretty nicely. This last little stretch from June, so end of June to now, Ethereum is up 64%. That is pretty good, considering Bitcoin from that same stretch is only up a fraction of that. Bitcoin's up around 25%, which again, nothing bad, but 25% on Bitcoin versus 64% on Ethereum. Compare the two, and you're seeing an outperformance. This is what I measured. I've got a chart alarm set here at Symmetry. So if we have a high, low, lower high, lower low, to me, that's where Ethereum kind of matches some symmetry and outperforms Bitcoin, and I might look to take some profit. So if I go back to my trade on Ethereum, if Ethereum runs up to these intermediate highs around 4,050, we have all-time highs at 4,800, 4,875. This to me is a good profit target. So these positions I set up for pulver alerts. This one is filled. This one is pending. So that one has not been filled yet. But the trade was taken right in here. And honestly, at this point, you can take the stop loss and kind of move it up into break even or better. I wouldn't take any risk on this trade. So if this just wants to run, let's see if we can hit intermediate levels. That's a good profit target. 4,000, 40, 50, good profit target. If you want to be a little bit greedier, then obviously trail it up into maybe all-time highs. Okay, but Ethereum's been a nice little run. Let's go dollar index. Catching a bid like I thought off of Symmetry. We're on the right-hand side of this little trend line, hitting the 50-day moving average. If we get above the 50-day, very possible to run up into the 100, 144. I think this still pulls back to 101, possibly 102. I think the dollar catches a bit of a bid. If the dollar catches more of a follow-through bid, it wouldn't shock me if the stock market does sell off a little bit. We're quite overextended. I don't see a lot of option flows through 6,300 right now. I really don't. I feel like there's almost this like huge call wall at like 6,300 to 6,350. I don't see us going too much higher than that without having some type of pullback. The call skew is one of the more like saturated that I've seen. We have lots and lots of call skews. The call premiums are really, really high right now. And so that's a good thing for if you're owning shares of something, selling calls, you're getting a decent premium for it. If you're buying calls, you're paying a lot of money for long calls right now, which is why I'm not doing it. I'd rather either sell calls against ownership positions or wait for a pullback to start selling some puts again if volatility increases slightly. Okay. So we'll see if this catches a bit more of a run from, just trend line to trend line. If we just run from this intermediate trend line to this kind of outer around the 100 moving average, something like that would work. Oil, 65 support still holding. Natural gas at 1592. I've got a covered call at 1650. Gold, sideways. Silver, sideways. Silver might be a bit more volatile since we had a thrust higher, but silver to me is still supported here, supported here, supported here. Any type of dip into the moving averages and then back up, I'd still like to buy silver. I'm targeting at least 40 bucks on silver. Ideally, I'm targeting $48 on silver. So I'm willing to hang on to this one a little bit longer. This has been a campaign trade for me for a while. And, once I had some really good profits on that last 2 to 3 year bull run on gold, I started to transfer some of those profits into building a silver position to allow silver to catch up. Okay. All right. Bitcoin, 118, recent highs at 123,300. MicroStrategy creeping up here. We've got earnings on MicroStrategy out to the end of the month. I'm just doing some income trades. I've got some collar trades, and I've rolled up my strikes. So let me get my new break evens here. Let me get to update this on the chart. So this is MSTR. Okay. Okay, so I've got a break even with a cover call at 400. I've got a break even at 364, so that's up about $3,600 that I'll keep rolling. The other one is own shares at 358 with a cover at 390. So that's up. That would be up about $32 per share. And then another one that I've lowered all the way down. This is kind of crazy. I bought this thing at 346. $346 was my initial purchase price of MicroStrategy. I now own 300 shares that started at 346 that are now down to 243. I've lowered my cost basis by over $100. So that's, $100 a share is pretty good. And let's see if I can just keep adding the income side of that. Okay, so not bad. I mean, overall, it's like MicroStrategy is one of my more profitable positions, and it's not even like I'm getting all the appreciation, the upside. I'm in a good position. I've collected a lot of premium. I'm just going to continue to roll and get some income for it. And right now, MicroStrategy is up around $55,000. So it's a good chunk. I think it could be bigger, and I'll continue to hopefully add more income to it. And that could be maybe 55K becomes 65, 70K, 75K by the end of the year. Not a bad racket on MicroStrategies by establishing some positions, starting with some collar trades, eliminating some volatility, have some downside protection, and selling a bunch of calls. Okay. All right. Some of that action there. Coinbase 411. Whew. Well, I do have a call condor on this one out to the 25th, which isn't that far away. I do kind of like this trade. Right now I'm down $11. This is a call condor. I do have a profit trap here. I'll show you what this looks like. Let's go to analysis. Okay, this is price trading at 411. I do have a profit trap. This gets into, July 25th expiration, which should be next Friday. Hopefully this doesn't continue with this crazy clip to the upside, or else I'll take on a little bit of heat. However, if we just keep kind of slowly grinding on Coinbase, this does potentially get into that profit trap. I still have about $44 of wiggle room here before price is going to be threatened, but that's my trap as well. So it's also possible that on this bull call spread component, this side of the trade, my 445 by 450 is a $5 profit trap, and then my sell call is 455. So the reason I took that trade is because the call skew was so great and so extreme on Coinbase that I'm like, I'm just going to try to put in a profit trap of here, give myself like a low delta. So this started out at like maybe a 15 delta. And so if price is going to test that, which before earnings, I mean, I get that we might ramp up before earnings, but we shouldn't have like a huge move. So this is either going to be like a $60 winner, or potentially runs up into a profit trap, and maybe I turn that $60 into like 160, 260, $360. Max profit would be 560. Okay. All right, that's Coinbase. Ethereum, like we talked about, big run since when were those lows? Lows in June, up 60+%. Ethereum has room to get to intermediate highs. That to me, like I said, is a big profit level. I would be willing to take some profit there, not holding Ethereum much longer, or at the very least trailing stops in case we run up to all-time highs. Copper, not a surprise move off that big like 50% tariff announcement, rips up to one of the biggest moves like ever and is fading from there. So not a huge surprise. I just didn't have the setup that I was really happy about. Plus the bid ask was really wide because the futures market kind of blown up a little bit. But it's not a surprise. We're showing some resistance on copper, probably pulling back into some efficiencies here. Japanese yen has been a little bit weaker. The Nikkei looking somewhat better postured. EWJ off these levels. I'd like to see EWJ get to all-time highs again. The DAX just off of all-time highs. The DAX looks like we could be forming a rising wedge. It might be a little premature to call that right now, but something along these lines, where it just seems like, okay, this low, this high. I mean, is this just coil and coil and coil and coil? Does something bring this back down? I mean, I think if you're patient, I think you could get a pullback to same low or a better fib zone that offers a dip opportunity to buy. I hope. I mean, this is the hard part, is if we just go up and up and up and up and up and up, right? Because the stock market oftentimes does one of two things. Either it runs like this and you're like, oh my gosh, it's going to be such a good trade to short it, and it goes straight up. And that's the capitulation move that then tops out and then forces the sell trade. But don't force a sell trade if you don't have confirmation, because these markets, especially in equities, especially in indexes, benefit from positive drift. So that positive drift means it just doesn't stop. It just doesn't stop. And then when people think it clearly can't go any higher, it rips higher and looks even more stubborn to the upside. And that's usually when a top is going to form. So, I mean, if you're in DAX, you're probably going to see more all-time highs, and that's okay. I'm just a little cautious on how much higher this thing goes after this type of reflexive move from low to high. And if this structure breaks, I mean, I would love to see a little bit of a pullback first and reestablish a discount and then get back to those all-time highs and just trade, trade the index, as opposed to like, well, got to participate. I mean, I would have never been happy buying a 236 pullback right there. So I didn't. I mean, I was looking for at least a 30 or 38% pullback. Never got it. But it's just drifting. There's room to probably get up to this 18127 zone. If I put a number on that on the DAX, you're looking at maybe a push up to like 25.5. So 25,500 or 26, basically 26,000. Between those two areas, I can see the market topping out and stalling a little bit on the technical side. FTSE also hit all-time highs, stalling here, but similar, right? Not even a 236 pullback from this low to this high. Not even a 236 pullback. So does it have room to maybe get up into the 18127 and then pull back a little bit? Sure, maybe. I'd like a dip to buy. I don't really have great structure to say like this is a potential, rising wedge thing. It's like it's not there yet. So I didn't even get the pullback that I wanted. So I have no trade on the FTSE right now. Argentina, right around the 200 moving average. Because this one was up like 80+% last year, I'm not that excited about buying Argentina. China pokes the highs 2 days ago. Brazil, a bit of a reset. I'm kind of disappointed. I mean, the good thing is it's above the 200 moving average. I'd like to see it stay there. We got a gap fill here towards 28 if we get a run up. Fill the gap at 28. Try to get to these recent highs at 29. Hopefully, this is a nice spot for bulls to be accumulating after getting above the 200 moving average and putting some higher highs in. So I'd like to see if Brazil can continue to work its way through. Maybe it's a grind until we start to really get some traction. But I'm still long Brazil and Latin America. That's EWZ and ILF. But they're holding nicely postured above the 200 moving average, which is good. Mags, we've had, I think Tuesday put in a bit of a hot, that was our red candle right here. That was Tuesday after the CPI fade. And then yesterday was indecisive. Today's the same, just indecisive. So not a lot of direction either way. So we'll see what the day ended up giving us. Apple, heavy call amounts in Apple. I'm trying to think. I put in some ratio spreads on Apple. I don't think I labeled them yet, but they're all here. The 170 by 165 ratio spread. And then I've got a little scanner play, covered calls 180, 180. If I were to, I kind of hate this trade. If I were to like sell a put at 170 and sell a call at, I don't know. I'm curious if I did like a strangle on Apple, what it would look like. I think I've got this trade in for a lot of my clients here. This is a ratio spread. So let me look at a trade right now. If I went out, Apple has earnings on the 31st. Let's see if I were to sell. Yeah, I mean, the puts they offer nothing. Like I go out, 30 days. after earnings. Puts don't really offer much. The call side though, I mean, selling calls at like 220, 225, 230, it's like those are great. Those are pretty good, to be honest. And at the money gets you, $7 to $10. So even a trade, I mean, hell, let's go earnings 31st. If I went to the 25th, could I generate some income on Apple right now? If I bought the shares at 210, I can pull $3.20, which gives me a little income trade. I'd still own shares of Apple. Get this before earnings. I don't know. It might be a little silly, but I'm like, I could probably generate by next Friday maybe $200 to $300 if price is greater than 210. Right, we're greater than 210. Then I pull in $300 of income by next week. Like that's not a bad trade. Now, granted, it's going to cost me cash wise. It's going to cost me like $20,000 to do that, but it's using that cash for a little income trade. Now, the smart trade, in my opinion, would be if I buy Apple and I want to go out a little bit farther, like go through earnings August 1st. Now I can sell a covered call at the money, 585 for income, and I try to finance it for like a big surprise move to the downside. Maybe something like that, where I can still get. That's not right. If I sell the 210 and I buy the 190, basically I'm selling an at the money call to collect the income side, but I still have downside protection through earnings. Something like that, where it's like, okay, I still get $500 if price just stays where it is. Through earnings, I mean, it's anyone's guess. Are we up or down? But I do have some protection if we have like a big push. Apple earnings would be the 31st. So actually, it might be a little bit safer to do something like this. That's kind of crazy. Look at this difference right through earnings. Look at the call premium at earnings. You go to August 1st, you get $5.80 for a 210. You go to August 15th, you get $7. Okay, so I could still get the income side. If I sell the 210, buy the 190, I still get $6 of income, and it's protected out a little bit longer than just earnings. So if I'm desperate for income, that's not a bad trade. I'd buy the shares of Apple at 210, collect $7.30 on the covered call, buy the 190 to make sure I have some protection. If price is greater than 210 through earnings, then I still get $600 on the trade. That's not a bad return on risk. So I'd go 210 minus $6 is 204. Get it called away at 210. So it's $600 out of a 2,400. So $600 out of 2,400. I'd make 2.9% in about 30 days. It's not a bad trade. Not a bad trade. So I'm going to put that on the list. That might be a to do. If you're okay with the buying power, I might do that on Apple. Apple usually doesn't have a ton of volatility. I think the downside protection would be important just in case it's a disappointing earnings. One thing on the daily chart is we are still below the buy zone. Like this is a resistance level, resistance level, resistance level. And if this holds, Apple has room to fall. Now, again, just thinking about risk. If I bought the shares at 210 and it falls to 190, I do have a put that would protect me. Okay. I would be able to lower my cost basis a little bit, but the goal is I need to lower my cost basis a ton just to make sure like I'm not taking on too much heat. And then I'd kind of get in the trade, repair it. So there might have to be some backup plans where if price goes up, I get it called away at 210, I start rolling it more for more income. If price goes down, I've got to have a plan B, which is I can have put protection, okay, lower my cost basis, do the math on that, and then also roll this call down and then repair the trade for hopefully, the goal is to make like $500 to $1,000 in the trade. If I'm going to allocate about 20K in cash, I want to try to make, hopefully $500 to $1,000 on a flip. I don't want to hold Apple. I just want to, turn it into an income trade. Okay. Anyway, so I'm interested in doing that on Apple. Amazon at 222. Broadcom, fudge, man. I've got a bear call spread here. I think it expires at the end of the month, or is it this? I think it's Friday. I think I timed that like an idiot. AVGO. Yep. So that's going to be worthless. Shoot. Well, Broadcom doesn't want to stop going up, so it looks like I'm going to lose on that by tomorrow. And honestly, it's probably going to be a trade. I wouldn't be surprised if this level, I'm just going to humor myself here, this level is probably reached by the end of the month. We probably get below 265 by the end of the month or into like the August expiration. I just, the market needs a pullback. So I just timed it poorly. Google, still fine. Nothing crazy there. I don't know. I might compare the difference between Google and Apple. Just look at like call premiums. Which one's better? Meta, not touching that one right now. It's just resistance. Microsoft also bleeding up to all-time highs. Netflix has earnings today after market. Market makers looking for a move of around $87, I think. Netflix, we have about an $80 move expected. Average earnings move is around 4 to 5%, if I'm not mistaken. Let's go Netflix here. Average move is about a 10 to 11% move. That's the average move. So let's go with 10% times the 1257. I mean, that's a $125 move. That could certainly happen. That's on the conservative side of 10%. We've had as much as 13%. Oops, 13%. 1258.18. That's a $160 move. We were trading at 1257. I mean, do we have a $120 to $160 move in the cards? That would be a blowout move on Netflix. But if we get it, I do have a price to fade. I'm trying to sell a 14. I think it's a 1400 by 1405. Trying to get that filled for a decent credit. So I'm trying to sell like the high end of that move, that expected move. If Netflix somehow misses or stalls, then we come down in price. The hard part about this one is, as much as I'd love to say I want to trade a bunch of options on Netflix, it's a $1,200 stock. I'm not that interested in a $1,200 stock. Not with controlling at least 100 shares to do an options trade, so it's just expensive. I'm not going to take that trade. But if this splits again, then there's a lot more I can do with it. Nvidia up to some fresh all-time highs at 173. Did some rolls this week, saving an extra $1.50. Tesla at 321 did some more rolls this week. Berkshire Hathaway, we are now sliding quite a bit below. This is one way to look at Berkshire Hathaway. If we start to see Berkshire back above the 200 moving average, that might be worth taking a stab to go long. I'm not sure why this stock is not getting much love outside of maybe the market's treating it like, well, you're net sellers of stocks last year. The stock market's up, the resiliency. Berkshire Hathaway is not an AI, blah, blah, blah. But it's not doing well. I mean, this has been kind of underperforming the indexes, which is a bit of a surprise. But where do we go from here? I don't know. I don't think we go too much lower than, that low or that low. But the safest trade would be if we get back above the 200 moving average. If that's the low, then you look to get the upside to return. So there's some decent reward to risk there. But I want to see if this will actually turn and close back above the 200-day moving average. Okay, bonds, 85.41, bit of a bid there. Let me see, actually, I might go into ZB today and let's see if I can grab something. I do a little bond spread today. So I can go Friday. How much risk do I take in if I put in like a low delta? That's not exactly a good trade. $31 to risk 470. Probably not a great trade. 78 to risk. I mean, those are just terrible trades. That's better, but now we need to see price go up and catch a bid, which I don't really believe that. So I don't know. I'm staying out of bonds for right now. TLT is enough. I'm just going to keep working the cost basis down on my diagonal spread for TLT. Okay, let's take a look at 10-year yield. 10-year yield has been up recently from, it's been up about 30 basis points. I still think it's sticky. This whole idea of, wanting the Fed to cut, the bond market's going to tell us whether it's a good decision or not. Yields go higher, it's not good. Yields stay the same, okay, fine. Yields go lower, probably something bad is happening. I just don't have a lot of confidence that the market's going to naturally just let yields go lower, right? To me, if yields go lower, that means bond goes higher. Bonds go higher, that means equities probably drop, right? Yields go higher. Why is that? Because what bond traders are telling the market is if you want us to hold your bonds, if you want us to bid your bonds, pay us more premium, right? Which is supposed to be a risk-free premium. So I think that the global bond market is still trying to tell the world, hey, if we're going to hold U.S. debt, if we're going to hold U.S. bonds, we want a higher risk premium, and that is a to be determined. So this is to me one of the bigger stories of 2025 to see if we break something like we did here in April. I think the bond market's going to tell us. China, just quick peek here, just off the recent highs in HSI, CQQQ up a little bit. Alibaba, okay, hanging in there. Alibaba's come back up. Has Baidu responded? A little bit. Really volatile here on Baidu, or yeah, Baidu was up, 10%, gave all of it back. At least it's stabilized. I'm still liking this stock to like 105 or 115. FXI, I have some shares. I'm trying to get this all-time high or this back to highs. I'm going to take some profit there. KWeb, same thing. I have some shares trying to get back to these intermediate highs. JD at 32, 31.95, just selling some calls. Schwab dividend, fine. Schwab growth, fine. SEHY, this is the non-US, fine. Stalling sideways. It's like the market's kind of come back and given the US a fair shake. So Schwab growth. We've had a bit of a decline in the 50-day moving average. So how many stocks above the 50-day? We're down to 62% in the S&P. Stocks above the 200-day were down to 55% from recently at 63. NASDAQ, this is all market breadth discussion. Stocks above the 50-day is around 65%. Stocks above the 200-day, 67%, off the recent highs. So market breadth took a little bit of a breath, which is fine. Market breadth took a breath. That's stupid. It just took a little bit of a breather, meaning like not everything was just ripping above the 50-day, above the 200-day. We got back into the buy zones for majority of stocks. How many stocks above the 200-day? Over 50%. That's a good buy zone. Okay, how many stocks on the NASDAQ? 67%. It was up to 76%. That's a pretty good buy zone. Okay, Costco fading. I think Costco can come back down to here. And if it does, I may be willing to do some ratio spreads. It's still an expensive stock. Probably not the best allocation in all honesty. Walmart collared out to August for 100 by like 85. Nike looking good. Some naked puts are performing well. Home Depot and Lowe's, nothing too exciting there. MasterCard, Visa, probably waiting on earnings season for these. Johnson & Johnson, big rip on earnings. Progressive, just slowly going lower. I think this hopefully will find a low around like the 230 handle, 225. This is also typically a lower beta stock, 0.71, so it shouldn't really correlate with the S&P, tick for tick. Chubb is down. Palantir just going to all-time highs, no big deal. Palantir, I have some ratio spreads. I don't know if I have anything right now. Let me check. Palantir. Yep. So that's a little scanner play, ratio spread. I'm up 80% of that profit on a ratio spread. That's not too bad for taking some profit. Yeah, that's not too actually. I mean, up 80%. Sit on this over the weekend, maybe out to the end of the month. Maybe take some profit before we have maybe a turn in August, September. It is going to be a volatile stock, and if it turns, it'll turn hard. I don't think this is going to be threat necessarily, but to make up to $500 here, $250 here, I'm up about 80% of the max credit. It's probably more capital efficient just for me to take the profit. I mean, this one I'm willing to close. I've got 1111s up 96% of max credit. So this one I'm probably going to close on Palantir. 1111. I can close that today and update that in Pulver Alerts. So that ratio spread is up 80%. My 1111s up 96% of max credit. That's worth taking the profit, not worrying about it. I can only make another $9 on the trade anyway. Well, I take that back. I can actually make up to $500 plus the $250, but we'd have to see price drop back below 125, which is possible. But if I can take just most of the credit now, I probably should and would and will. That's not a bad trade. So that's a nice little winner on Palantir. So I'll take some profit there. Nice. Hims off of that announcement that was something, wasn't like Ozempic, like they were removing Ozempic from their offering, or they had some, I don't know, they had some big slap on the wrist and markets hated it, but it's still responding. Carvana off the highs. Salesforce pretty crappy still. Let me go to Zoom. Should be Zoom or Zoom ZM. Maybe this type of structure. Maybe something like that. I mean, the safe trade on Zoom, like this is a pretty clean ceiling around 90. So it could just be more accumulation on Zoom, but maybe one to consider. Fundamentals look strong enough. Let me have a quick peek here. So ZM. I mean, Snowflake looks really good. Way below estimates. Not bad, not bad, not bad. Price to earnings 21.5. I mean, we got fair value at 120. That's got some legs to it. Maybe a 65, maybe a 60. Let me see what I can do here on a little fancy ratio spread. Maybe Zoom. Let's go out. So we have earnings August 20th. Let's go end of the year. I could probably do a good ratio spread on this one for some income. That low is 64. This low is 55. Maybe doing something at like the 62.50 by 60. $8. $39. This isn't bad. Little $100 here. Do this on everyone's account and grab, maybe $1,500 on Zoom. Probability of profit's pretty high, about 88%. Chance of assignment, I would say, is about 10%. If I get assigned, I'll work the shares. What do I get for a covered call? An at the money covered call can pay anywhere between about $2. What's that premium? So $2 out of a $75 stock. That's not great call premium. Not great. But the chance of assignment's pretty low. I mean, if I owned it at 60, I'm owning this thing at August 2024 lows, which was a nice correction zone, right? We had that dip from July to August. That was lows. We come back into 2019 lows. We come back to COVID lows, 2022 bear market lows. I don't know. I mean, I think I'm willing to kind of own it at 60, work the cost basis down to 60 or lower, and Zoom should have some upside. So I'm going to take this trade. So I'm going out to January. A 62 by 60. Let me see if it's worth it to go up a little bit. Not really. If I wanted to go up and collect a little more income, I mean, that puts me at like a 20 delta, changes my probability of profit. That's more income, but the safest thing for me is just grab the $100. Grab the $100. That's not bad. All right, I'm gonna go Zoom. Looks like a 116. Or I can go February. Let's see what this one looks like. I can go 65 by 60. Let me try this one. So if I went February, 65 by 60, less credit. This one, this is more credit. I'm going out an extra month, but the assignment price is a little higher, but my income is double. So for an extra month, I can make, $240 versus $110. But my strike price is now 65 versus 60 as far as an assignment goes. Profit trap would be this plus the 250. February is usually a pullback month. So if I took assignment at 65, I'd only take down two. I like the other one better. I like to own it at $60 for less. So if I went Q1, this one might be a little bit better. Okay. I think I'm going to take this trade. I'm going to go 62.50 by 60, pull in $1.55 or so. I'm going to try to go to that 320 expiration. All right. So let's see if I can get filled here for $1.60. Okay, $1.60 not taking. Let's go 58. 57. 55. All right, I got filled for $1.50. So $1.50, that account, that account, that account, that account, that account, that account. That one, that one, that one, that one. All right, those are the accounts that are going to get filled. So let's do this. Filled. Come on. $1.49. $1.48. Jeez, oh Pete's. All right, 48. Okay, so trades in $1.50 to $1.48 credit. $1.50 to $1.48 credit. All right. So here is the trade. Zoom. This is out to March 20th. And I'm adding puts. So I'm going to add a buy put, sell put, get rid of this one. And I'm selling the 60, buying the 62.50. So that's the trade right there. Pulled in. This is 180. What fee are you taking in? Good Lord. I pulled $1.50 out of this trade. Anyway, that's what the trade looks like. If price stays the same, price goes up, price goes down a little bit. There's still a profit trap here. If price comes back down to $60, we'd retest those lows. I have a potential $2.50 profit trap on top of the credit that I received. So max profit on the trade would be the $2.50 plus $1.50. So I can make $400 on the trade. I'll take that screenshot. Okay, so I'll get that posted for Pulver Alerts. Zoom is in, and a 62.50 by 60 ratio spread, $1.50 credit. So what I'm expressing here is I'm willing to own shares of Zoom at $60. Probability profit, that price stays out of the way, is about 85 to 86%. Yeah, 85% chance of profit. If I get assigned on the shares, that brings me down to a risk of $1.50 plus $2.50. So it lowers my cost basis from 60 minus $1.50 minus $2.50, $56 break even, which puts me at around, about a 10% chance of like assignment and risk, which isn't too bad. I mean, I'll take those odds, and we can max this thing out around $400 profit if we get into that ratio spread trap. Otherwise, income around $150. If I do that on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it's not bad. $1,500 income, and just another little trade for the bottom line. Okay, so we'll get that posted in Pulver Alerts after a wrap up here in just a couple minutes. I'm going to try to see if I can find another trade. Let me add in some. I'm going to add into my watch list here. Zoom. Let's talk currencies for a moment before we go. Again, anything currency strength? Probably not. How the heck did that happen? Okay. Aussie CAD. Let's see. We're at 62.83 today. Coming up to my resistance level. Let's see if this level reacts or if the market's going to try to get up into 6290-ish, 6300, maybe testing the highs from Tuesday. It wouldn't be impossible. I mean, if we hit that move for the day, we started out down here around 6260. Is it possible for the market to move up about 0.6% to retest the high of the day or the week on Tuesday? Yeah, it's possible. So see if we get out of this dead zone. I do have a butterfly spread at the 629. I'm watching that. We're 628, 626 on SPY. I'm looking at a 628 or 629 pin price for SPY if we get up there. So we're above 625, maybe in some open space. 628 can get hit today. I'm curious if that helps my butterfly. We maybe tap that 630 zone, which is right here. SPY. This should be growing. Oh yeah. You can write this down. Don't be surprised if we hit 629 and 630 by today or tomorrow. That's a big gamma level, and there's some open space to get there. So I can see this market drifting, melting up, trying to tap those highs. I do want to kind of fade that high, but 629 and 630 is a big pull. That's a big magnet for price this week. So by tomorrow and Thursday, or tomorrow and Friday, probably able to tap that level. But I would think after hitting that point, we probably fade off of it. So thinking of some trades. I might actually do like a broke wing butterfly and kind of fade that if I can get a good fill. Trade that out for like a week or two. All right, so I'm keeping an eye on those. Watching this dead zone level for the day, see if we get back to try to retest Tuesday's high. Trying to think anything else. Markets are up. S&P's up 1/3, 1%. NASDAQ up almost 2/3, 1%. Dow is up 1/4, 1%. Russell up 0.8%. VIX is down to 1683. Dollar index, oil, gold, silver. Gold's flat. Silver's sideways. Bitcoin's sideways. MicroStrategy sideways. Coin up 2.8%. Still have some room up to 455 before I'm threatened. I'd love to see that call counter work out nicely and give us some bonus profit. Ethereum ripping over 1% again today. Happy with that. Let's see if we get up to that 4,050 level. That's a nice little intermediate target. I want to go some currencies before we go today. Aussie CAD. Just going to wait. Still waiting for dips at the 87.50 zone for a pullback. Aussie Swiss. I'm still long and holding, trying to get back to this 55.50 zone. Aussie yen. I don't have any trades on yen pairs right now. Aussie New Zealand, nothing. I'm still long in this one. I'm looking to get back to like 111.50 or higher. Aussie dollar. It's like this annoyingly perfect channel that I'm just not buying. I want to get a pullback to like 64 or 62 if I'm really going to buy Aussie dollars, those levels. CAD Swiss, hopefully catching a bottom. Hopefully, but we'll see. I want to see this thing. Like, I need a bottoming pattern here. This thing needs to hold the lows, get back to these levels, sweep these highs, give us a reversal pattern, give us a 5-wave move, get the fudge off these lows. But not yet. Just hasn't happened yet. So I wait. CAD yen, no trade. Swiss yen, no trade unless I see a big fat topping pattern, which is a long ways away. What's funny is Swiss yen could actually be a positive swap trade if you sell it, because the Bank of Japan is at 0.5 and the Swiss is at 0. But this is just not a currency pair that I trust to sell. Euro Aussie, nothing for right now. Euro CAD, nothing. Euro Swiss, I'm still holding lows. Euro pound, all over the place. Maybe just a bigger range. Range highs, range lows, just more volatility on euro pound. Intraday highs on SPY, that's good. Hopefully intraday highs on SPX as well. Euro yen, Overbought conditions, maybe enough to get into this like 173 to 175 zone. Euro New Zealand, say no trade there. Euro dollar fading a little bit. This is the inverse of the dollar index. Pound Aussie, equal lows to buy from. If you picked up a 205 level, that's not a bad entry. Pound CAD, maybe some support here at the 144 200 moving average to keep this thing alive. This has been making higher lows for a while. Pound Swiss, good spot to buy those lows if you did. 107 down to 105 or so. I guess 107, 106, nice spot to be buying low. Hopefully this pulls back into, this 111, 112. I was actually targeting a 113.50. I think we still get to 113.50. Pound yen, nothing. Pound New Zealand, choppy. Pound dollar, broke the trend line. If the dollar continues to show a little bit of bid, then this could be a topping pattern to at least force a retracement back to this trend line. So, I mean, it's a swing trade. You get a pullback here like 50618, stop loss above, go after a symmetry swing. See if the pound dollar offers that. That is a swing trade if the dollar gets stronger. New Zealand CAD, I'm waiting for a pullback to like the 80, 50, 80, 25 zone to get a buy trade in for a 618 swing. New Zealand Swiss, no trade, hasn't turned up yet. New Zealand yen, nothing. New Zealand dollar pulling back. I wouldn't mind taking a scoop at this one around 58.50. That'd be level one, and then buying it again at 5,600 and just kind of waiting this thing out. Dollar CAD, maybe on the verge of breaking this trend line. Just don't be fooled by this one. This one could like break the trend line and still hug the right side of the trend line. I'd rather be buying it as low as possible. I don't like this noisy area. So I'm unless this is like an obvious move back above like 1.40, then we look at a swing trade, stop below, swing back to the highs. But that'd be watch oil. If oil is not making a big room to the big move to the downside, I wouldn't trust that the dollar CAD is going to go higher. So anyway, dollar Swiss, definitely catching a bit of bid off that 7,900 zone, which is good, but there's a long ways to go. So if this breaks the trend line, hooray, we get a pullback here, make a higher low, higher high, hooray, all these things, right? So just if it breaks the trend line looking better, I'm trying to get out of my dollar Swiss around 87 to 8,800. And then dollar yen, probably some resistance here at that 149.50 to 150 zone. Be careful. If it turns, it can turn aggressively. If it doesn't turn, we're just grinding higher. It's still a huge range, literally set up from July to August 2024. It's the same range. So lows are respected, highs are up here. Your guess is as good as mine. If you trade dollar yen, you trade it, like just align it up. Take your daily structure, go down to like a 1 hour chart, 15-minute chart, 5-minute chart, get your alignments. Maybe you got some flow. Okay. All right. 1 month implied correlation. I think it's fine. All right. So for the day, let's see where we go. I'd like to see if price can stay out of this dead zone for the day, get up into maybe retest the Tuesday high if possible. That'll only be about 0.6% on the day, but it's possible. We started out pretty much right where we closed yesterday, so maybe the market has some flows to the upside. Just stay out of the dead zone. Stay out of my dead zone. SPX 62.84. Stay out of my dead zone. Let's go to 62.95. Let's try to test 6,300. Watching. All right, I'll let you go for today. Let's come back and do it again tomorrow. Thanks, everybody. See you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.